Good morning, everyone. This is Rose. Today is February 22nd, Thursday, 15 minutes after 9 a.m. Eastern Time. Okay. Just doing a quick audio and video check. So everything seems to be okay. Okay. All right. Sorry about the delayed start. Normally, L starts around 9:30, 9:15. The charts are alive, and he always been starting 9:30 a.m. We wanted to do a little bit earlier so we could do recaps, but sometimes some of us, I have to drive people around. I live right outside of New York City, so there's train schedule when it changes. I'm the designated driver, so I have to move people around and drop them off and pick them up, and it's a nightmare. So I had to catch the train for the person trying to go into New York City. So sorry about the delay, but let's see what is happening with the market right here. We have, I think the market went up around, what is it? Closed here, 14. Oh yeah, so it's about 53 points, 50, say around it, 50 plus points it went up after hours, kept climbing. But look what happened on the daily. So we talked about on the blog, and Brad Wolf has been writing about this, saying that the market will transition into some kind of a trading range. And take a look at right here. We have is being gapped up above the 20 EMA on the daily, and market went into sideways, tested below the EMA, bounced. Bears never were able to just get a breakout from below the EMA. So market stayed bullish. This day definitely was a sign that we were going to go sideways. So a similar situation, but it's not all that bearish compared to this trading range. And you can see that buyers showed up once again at the EMA, but we have been up for some time. You got a leg one, pull back, leg two, pull back, leg three. So how far are we going to go? Is this wedge right here? We have broken this wedge twice, but this is the first time we're staying below the trend line. But the bulls immediately buy. That's because they were stuck up here. Now, market was getting way too, high, but I still don't know if bears are going to show up because they're not showing us any kind of bear bars below the EMA. But this still puts us in a trading range that could last for a while. So could this be another final triangle breakout? We do have, so we're right around here. Let's see, we're actually going to be way above outside, broken out of this triangle, because right now the price is at 50.63. So we're going to be opening up yet again right at this trend line. If market can stay bullish, this is where I want to see bulls actually test this trend line highs. That's always been the projected targets for me. So if we can actually stay bullish, take out this high rather than making double top. But now that we are in a trading range and we're at the high of the trading range, there could be actually bears waiting there to trap the bulls. So I don't know how far we're going to go, but if we continue, this trend line is my target, upper trend line. If we get trapped, bulls get trapped at the top of a prior high or a little higher, we're going to come right back inside this trading range once again. So I always had these lines, and I said this is support here. We're going to bounce even if we come down for the second time. And you can see we have come down for the second time and we bounced again. Now it's just a matter of keeping the market up and about and continue to go higher. If we fail, then that's fine. Could be, but I still need to see the trapping pattern, and that could be at the highs, something like this, down on this, Okay, high or low. I like to see it go up. Everybody buys, trap, and then we start to come down. Okay, if we move underneath the EMA, look for another trap. Bulls will try to trap the bears. That still puts us in a trading range. But this is what I would like to see. Wedge top, undershoot, overshoot, and a lower high. Then I like to see market actually move us down to this area. Okay, it's tight trading range, but I think market even continue to come down into these levels, but we will bounce there, and then we have to create another lower high. That would be complex leg 1, pullback leg 2, pullback, final leg 3. If market starts, okay, to sell, and that's not all that easy, I think we still need to trap the bulls before we create that lower high somewhere inside this trading range, and then we break this, then we become bearish. Okay, but nobody knows. So far so good. Buyers showed up, but those buyers were stuck up here, so they're trying to get back, and they are. So we are already back up here slightly, although I want to make sure. Yeah, I mean, we're already back up here, so if the bulls want to continue, that's great, but I'll be on the lookout for some kind of a bull trap on the daily chart. Otherwise, we're just going to keep going higher. Let's see. I mean, it's pretty high, but what are you trading? Are you trading the daily chart? And you can see that we might be actually forming, okay, we might be forming that trap because we made this low is lower than that, and that's what I generally look for. So we're squeezing here, and we're gonna break out, and we're already up here, but I'm worried that somewhere around here we could trap. So if you're buying high, buying here, it could be too high, yes, because there's a potential of trapping the bulls and then coming right back down. And when the bears actually do start, if they start to sell, they're going to be, look, we're up, we come down. Like this area, there will be buyers, we're going to bounce. This area, there will be buyers. If they can actually stay above the 50% of this trading range, we got leg 1 for bears, leg 2 for bears, leg 3 for bears, leg 1 for bulls, leg 2 for bulls, leg 3 for bulls. Before we break out, bulls really need to hold this line. Then they can squeeze out the bears, and we could still become bullish and maybe even project this trading range to the upside. We could still get that, but I don't know. We are right now going sideways, and we're going to be stuck in this trading range for a while. So it's going to be some trading range trading, I think. But to me, yeah, I mean, I think it's pretty high, but market has been rallying, so I think all the bulls are still holding. And you can see that the way that we bounced from the EMA is a good sign. It's just that are we going to be able to stay above that EMA and at the highs without getting trapped? So that's the question. Now, we do have a wedge top is on the Globex chart. Okay, you got a spike pullback and a channel up. Channel began right around here, which happens to be my key level, midnight open and Asia midpoint. So I might be wrong on there, but nope, I am right. Okay, so if the seller starts, and here are several areas where bulls are waiting. So we had 1, 2, 3, then we broke out. The whole thing's a spike pullback channel. If we start to come down, there are buyers waiting here as early as, so we're probably going to bounce there. And then if we start to come down, this is where I want to see majority of the buyers bouncing this back in somewhere here again. So I'm not really looking for a major reversal down, but if this area bounces and then goes back up to the breakout point, so look, if we come down, break that, go back up, come down, right? When we go back up again, then we sell. So there will be buyers waiting here. If this breakout test holds and the sellers start to sell, I'm going to sell into this area, but there will be buyers waiting here. So what about bulls? Can we make another push up and then trap the bulls above the Globex side and then come down? We do have a wedged up here and they're trying to get a double top, and then they probably want this neckline. This is an important breakout test. I bought that earlier and then traded the bounce. We break this, then I'm going to look for a lower high and I'm going to sell in here and to that high, perhaps somewhere here. Buyers waiting either above or at. So if we start to, well, we're going to be gapping up, a huge gap up, in fact. We are going to be opening up, gosh, somewhere here, last week's high. And let's see. Then, is that last week's high? 66, yep, it is. So, if we can come down, then last midweek is still intact. I don't know if we could pull back there. That would be a lot of sell-off. That would be more than 60-point sell-off. Probably we're going to be coming down, but we could also stay somewhere up here as the EMA could reach. So we're going to open up somewhere here. If market comes down 3 legs and then the buyers show up, okay, so EMA catches up, we could eventually come back down in a much bigger 3-legged move with wedges, sort of like a nested wedges. So you would have one goes up, comes down, goes up, and then maybe smaller 3-legged move within that large leg. Then we could go sideways perhaps. So it's gonna, bulls have to keep the price up here for EMA to catch up. I mean, it's gonna be a huge gap up this morning. So they're gonna try to keep the market probably somewhere up here between this level and last week's high, range high. Okay. So we'll see how this goes. Big trend has to go into some trading range, and we are already forming that. We might need to come down and test these levels, or we're going to go first, make another 1, 2, and 3 push, okay, then come back down, double top, and then go in. So this whole thing area could be the trading range we could be stuck in today. All right. Where is, oh, sorry guys. I needed to turn the data connection on. I needed to turn the data connection on. Just waiting for the data connection. I had to turn it off for a second. I forgot that it was off. Big bear bar so far. I'm just waiting for the connection is to establish. Here we go. Major gap up, but first bar is already bouncing. Just looking to see. We had jobless claims came out at 8:30 a.m. Chicago Fed national activity came out at 8:30. PMI composite is 9:45, and existing home sales is 10 a.m. this morning. And if you're trading oil, that comes out around 11 a.m. Eastern time. So 9:45. Why is this not updating today? Give me a second, please. I have the data connection established, but every chart other than this monitor is not showing me the bars, but every other chart is working. So just give it a second. Maybe it's still loading. Bar 1 is, wow, it's already 10 points long. There we go. Here's the problem. Look at the ATR. It's saying average move could be 20 plus points. So you already have this bar, okay? Started at 63, I mean, the high is 63.50, low is 54. So it's almost I mean, look at this. It's ridiculous, almost 10 points. So, and the ATR, and the bar looks small, but it really is not small. That right there is nearly, yeah, it is 10 points. So you got the ATR is 21 point. It's telling you market, the bars can have average 20 point, okay? So you better trade small here, like switch to micros or something, or only trade with one contract, or just wait for volatility to diminish a little bit. So, so let's go to the encyclopedia quickly, right? Big gap up, not one of my favorites. I like it when market actually opens up around the EMA. Gap up. Gap up. So big gap up. I mean, this is just record high, I think. So we might need to go sideways and wait for EMA to catch up. Or you can find your average price by using 19 bars from here and 1 bar from here, so 20 bar trading range. So I'm going to find the average price. Yeah, that's what I'll do. Stop. Maybe the 20. The average price is right here. So EMA is the average price, but this is your average price right here. So when EMA actually catches up, I will remove this. Okay, so market could sell and try to get closer to it. If the bulls do not agree that this is average price here and they should be loading up and buying and keeping the market high. If they don't agree and nobody buys, we could quickly come down. Big bear bar. Bears need 2 bear closes to start a bear trend from the open. So we need this bar 2 to close on its low with a decent bear body to say that this is going to keep selling, maybe with 2-3 legs down before finding any buyers. So I didn't really sell anything here, but I'm sure there are already sellers looking for this move to come down. We broke the neckline, double top neckline. We need to bounce a little bit to create a bear flag. Okay, we could go back and test the 57.25 on the Globex chart, which is a breakout test area. Third time they're testing and it breaks. So let's see if we can actually test that moving average. But eventually I'd like to see some kind of a bounce coming back up to this area, maybe not the 57.25, but a little bit further down, 56 area, 50.56, form a bear flag and then sell. I didn't sell anything underneath bar 1 because this could bounce. Bears will probably want another bear bar regardless, but what if we go and overlap? So as long as the bull bars show up, they're gonna speed up the move of the average price. It's gonna magnetize it further up faster. So they're trying to have another bull bar here, but the bears will want at least another bear bar, possibly after this bar 2, even if it closes bullish. Now, at the open, let's take a look at how the bears found or market found any kind of trades. So here we go. This is the bar before the open, so that's 5 minute, right? So that's your first bar, and we're up. So 1, 2, 3, overshoot, undershoot, and you got a bunch of bear bars. If you actually trail a sell stop right there, right, is you actually got filled maybe underneath here. You get filled, and market, I mean, that's 59, 57, 56, 55. That's 4 points. Here is 5 points, 8 points. So you see how 6 points, I mean, market just moved and gave you a really excellent scalp there. So I think the bears will try to sell again. And this was my bounce for swing traders. I said look for a pullback into this area. If we break this area strongly, then the bears will try to move down here, but I expected a pullback. They came in a little bit extended, but look, bulls did show up. So you got 1, 2, and 3 wedge. Can the bulls actually bring us up to these levels? Yeah, I'm still holding, thinking that these are going to be my next bullish level. So the bulls need to keep the market up here. Okay, that's why I didn't sell. And average, I'm waiting for EMA to catch up. So because if they agree that this is good enough and they want to continue into the swing long targets, they're going to have to break this, maybe 1, 2, 3 wedge, break the wedge top. That's a wedge failure, and continue to go higher. I don't know. So on the 30-minute, okay, count began with this bar. So you got 1, 2, we need to make another third push, then come down, then keep going higher. But again, that's a 30-minute chart. It doesn't matter. Pattern is a pattern. So I didn't sell anything under bar 1. I want to see if the bears can get another bear bar here and then continue to sell maybe with a second entry. If they fail, we could go and test the bar 1 high. So we are stuck inside the bar 1's range. Bulls probably want to go and test the bar 1 high, but you're at the 50%. There will be sellers. They want to close a bear bar, probably want to check out the low of bar 2. But if I don't see any bear bar, I still don't want to sell anything. We could go and test bar 1 high. Worried about that. So we came down, we pulled back. Bears really need to close a bear bar here. And they need to close the body on the Globex below the 57.25. This is not good enough. 57.25. This is not good enough. Because it could turn into a bull flag, 1, 2, and 3. It's another reason there wasn't enough space to sell. So I didn't get my second sell bear bar to say this is a trend from the open for bears. There is, in 2 minutes, news coming up, so news can be a catalyst and could make us go and test the bar 1 high. Anybody who sold underneath bar 1 trapped, so they're going to be forced to sell higher probably. So they're hoping that market will go up, bar 1 high and test, and there will be bears waiting to sell and break even. So U.S. manufacturing PMI flash is coming up in about 45 seconds. I think we need to wait for that. I'm not going to trade this news hour. Okay, news just came out. We are testing bar 1 high. Last week's high is where they want to go, probably. But there will be sellers waiting up there. They're not happy because they're stuck underneath bar 1. Look at the daily chart. I did say that we really need to trap these bulls. And in order to do that, we have to allow them to take out that prior high first. And we are right at that prior high. So if we can just allow them to go up a little bit, if they don't and we trap them right now, this is good enough. This is actually a beautiful reversal pattern, but I need bear bars after this bull bar, so I'm not going to sell anything here just because it looks like the pattern. Pattern has to trigger before I do anything. Otherwise, I can sell here and then this could go on and on and on and I could be trapped. Okay? So, all right, EMA is almost caught up with the 20 bar average price. I don't really need to hold it, but I'm just going to wait. Bulls trying to go a little bit higher and higher. Can today be trend from open? Well, it is. It's kind of is setting up to be that. So what if we never come down to the EMA and stay above the EMA for the longest time? Okay, can that be gap up and bull trend from the open? Yes. So we are. Here's the 1, 2 bars. We're already above that because the bar 1 was so big. Think of that. I mean, it's about 10 points, right? More than 10 points. So it's 11 points. So think of that as a 2 bars, right? Because it's not regular conditions. And we are above that. We don't even have upper wicks. See, even with these upper wicks, we actually bulls maintain their positions above, and they're breaking out. So that means they're making new spike pullback and channel with small pullback bull trend. And they stayed above the EMA for the longest time, and this could happen today. So market is going up and up and up. I am not interested in this anymore. I am going to get rid of this because EMA already caught up. There was no reversal. I can't really use that. So we haven't trapped any bulls, and the bulls are buying. So that means they agreed that this price is average price and it's good to buy and mark up higher. But what if we are making, so you got a wedge top. What if we are already making a brand new wedge top here? That's fine. But that means we need to go and test. We're already testing if you measure it this way. So maybe we come down now, or we're going to expend a little bit more, test, and then come down. So breakout of last week's range high targets is we are still inside the trap zone. Bears are going to try to trap the bulls as we reach this level, and we could still trap them and reverse it. But if we start to continue to break this line, this is the target bulls want to reach, and we could reach it. It's not so far away. Okay, it's just about 26 points, 20 points or so, 20 or 21 maybe. So we could keep buying this steadily, 20 points. There's now, we reached that already. You can average it and a follow through target. I like to do it this way. 3 bars, breakout, 3 bull bars, market could continue to push into that. Conservative way, you can also use that. That's the way I do it. So 90.25, I think the market is going to keep pushing into. Bar 4, I don't think it's an exhaustion bar. It's a breakout bar. So bulls are trying to reach this upper wedge trend line. Possibly. So when you have a big gap up like this, you get 60% chance of swing up within the first hour, 85% chance of pullback in first or 2 hours, is 70% chance swing up after 10 a.m. Pacific time, and that will be 1 p.m. Eastern time. Okay, that means we have to stay above the EMA and we could get another bounce. 75% trending trading range day, or trending range by midday, 60% chance of trend resumption up in the second half of the day, or continuation of day-long rally. And the 35% chance of gap will close today. So here's your huge gap, but that's a 35% chance. Here we go. If you want to study this. Now, we have tested this trend line, not able to close a bull body. Is this now a trap? Let's take a look at the daily chart, which we talked about. Bulls getting above that prior high, okay, and have an attempt to trap the bears have an attempt to trap the bulls. It's not yet decided. This bar closes above that high with a bull body today. We could continue tomorrow going higher, but obviously it's a daily bar. So that means you have to look at the hourly bar, last week's range high breakout. If the bulls close a bull bar, we could continue to go higher, and the bulls would turn the daily bar into a much stronger bull body. But we are right now struggling at the last week's high already. What if we make a wedge top and then come down? Yeah, that's possible. So here's your up, down, possibly go up again before coming back down. By then, EMA would reach here, but that doesn't mean that we're going to come down and test the EMA. So we could keep the gap open and keep going with a small pullback bull trend until sometime midday, or bar 50, 40 or 50, I don't think the 40, but the 50, we would come down and maybe test the EMA. But then we would bounce from the EMA Okay, and so 70% chance of swing up after 10 a.m. So that's 11, 12, 1 p.m. Eastern time. 1 p.m. Eastern time is bar, I think that's bar 42. I don't know. I always forget that. By 40, sorry, is 1 p.m. is, oh yeah, I was right. Bar 42, what do you know? Is, so bar 42, so between bar 42 and bar 48, 1 and 130, we could come down and test the EMA and then bounce once again. So that's a higher probability, so the odds favor bulls. I'm not liking this. Unfortunately, I have to remeasure that. That is the target now. If this bar 5 were to stay bullish, then I would not have remeasured it, but this is my target now, 81.25. So I'm looking for 81.25 test. So breakout, pull back, breakout bar 4, pull back bar 5. Looking good for the bulls. Is they have to get us that target now. And it's possibly the test of this trend line now that I'm hopeful we could actually get that perhaps. And we don't have to stop there, 81.25. Bulls can push this further up. If they can close this bar bullish enough on the 5-minute chart, we could continue to go up to 82, 80, 82, slightly above. But we need to close this bar bullish enough. And we need to take out the open of bar 5. Another news coming up at 10. With the close of bar 6, you're going to get a flurry of activity. That could be the catalyst to push us into 81.25 to 82 area. So especially if this bar closes above, that means continuation. Above the bar 5 open, market will accelerate quickly into this target area. So you got about 50 seconds left for the news to be released. That could be a good catalyst, perhaps. Can we reverse suddenly? That could happen too. News will, news bars are not good bars to trade, but I would assume we're going to try to get up here. However, if this bar suddenly becomes bearish, that's why would that bar become bearish? Why was the bar 5 a strong bear close? Because anybody who sold underneath bar 1, I said they will probably be forced to sell higher. They already started selling probably 5 points and then sold about 10 points, but they're not getting any relief whatsoever. That means market wants, they want market to come down and test the bar 1. Now, we have a bull bar closed above the open of bar 5. So that's good news for the bulls, and they can push this higher. But it's a news bar, and you have an outside bar 5, inside bar 6. Bulls want to break out from the bar 5 high, test the 50.79 at the minimum. Bears want to come down and test and get a breakout from the bar 5 low. Odds favor the bulls due to big gap up, and it's most likely we will go and test this area. That's what I would think, but it's news. News can go up and down. We're stuck in the range of bar 5. As long as the bar 5 midpoint holds, which is 71.75, 50.71 and 3/4, we could easily go and test the bar 5 high, which is the mother bar, and then get the targets. Bears want to trap the bulls here, but I think Might be a little late. We might really need to go and test the bar 5 high. Unless suddenly we close a bar below 71.75, but it seems to be okay for bulls. Still looking for is one of those targets to be hit. So that's 81.25. I'm long. I want to scalp at the high of 5 and then leave a runner. I don't know if I'm going to be able to get that, but hopefully I will. It's the news bar, so you have to trade either small or not trade and wait for 2 bars and then look for a direction and then enter because it can turn on you. But the bulls could still go higher. It's the news bar. It's going to go up and down, is up and down. I took a small risk there and didn't like the bar was coming down. And I didn't feel like buying again and fixing and then the phone started ringing. So I was like, I just exit the call. I exit the trade and then don't do anything. So there will be another chance for me to enter. As long as we stay above 71.75, if the bulls can actually close this bar, they failed. Okay. So we have a double top here with 5 and 7 high. But still, it's not all that bearish, although it is a double top, but the neckline is 6 low. It's a bull bar. Some bears are trying to sell and bring the market back down to the bar 1 high because they're stuck, so they're trying to get an average price to exit before market goes higher. I don't know if I want to sell it. I'm not going to sell this because we have a breakout bar here, and this is basically a channel up. It's kind of a bull flag, and it's trying to reach those targets still. So two bars. I'm sorry. This is the second bar. News bar we'll get a direction once this bar closes. I used to wait 3 bars, but after watching Al, I reduced that 3 bar to 2 bars. So I no longer wait 15 minutes for news to pass to make a decision what I want to do. 10 minutes is sufficient. But I have to admit sometimes I chicken out, especially with FOMC. I do wait sometimes even more than 15 minutes just to be sure that I'm in the right direction. So this is the second bar for news 7 and 8. If that bar closes bullish, bulls will try to push this higher to bar 5 high and probably going to test 50.79 minimum and then continue to go higher to maybe 82, 83. I'm going to mark 83. According to my calculations, we could reach 83 as long as bar 8 closes bullish. If this bar doesn't close bullish, suddenly we close and take out the 7 low, market will want to come down and test the 5 low. But no bear bars, then I'm not going to worry about it. But terrible follow through for bulls, for sure. All right, you get a nice breakout bar 4. Pullback is what's up with the follow through. It should have been a good breakout. So, and the news doesn't make it any easy. Stretch this a little bit. And 15-minute bar did not close, that bull bar did not close above this trend line. So that's a problem as well. But we can still stay bullish. We're in the trap zone on the 1 hour chart, but we didn't really test that upper portion. So we could continue to go high perhaps. So I want to see bulls do better here and not give up. But that means they have to go and test the 74.75. Close above 74.75 is to become bullish, but that's not enough. They still have to break out from the bar 5 high. Is the target for bulls is around 78, 79, and then 83 is also the measured move, 3-bar measured move. Conservative target is 81.25. So bulls really need to step it up here. Inside bar, another inside bar right here, 6 and 8. So that's bad. So now they couldn't close that bull bar above 71.75. Market is coming down to test the 5 low possibly. But you get a big bar 6. Some buyers are at the low or the lower third of bar 6, but the bears really want to test to see if they can break out from the bar 5 low. So they have to close another bear bar to do that. But that could also become 3 inside bar failure within a large bull bar. Bulls are waiting there to prevent bears from taking out the 6 low because they want to continue. So there is a flag situation here, bull flag. So in order for this bull flag to break out, bulls need a bull bar here. And they are doing their best to trap the bears, okay? I didn't sell underneath 8. I'm looking for bulls to close a bull bar. If they fail, then I really don't want to sell inside the range of 5, to be honest with you. Because it's bullish before, you're just stuck in this channel, and we could still get trapped. If you sell this, there are bulls waiting underneath bar 5 trying to trap these bears looking for a breakout and reversal back down to bar 1 high. So if the bulls can trap those bears, you're going to be stuck within the range. Okay, you have to see a bull breakout bar closing below 1 tick, the minimum 1 tick below bar 5 to say, this is a breakout, I can sell this all the way to bar 1 high. You still have to take profit there. But what if you don't get it and then they trap you somewhere at the low or a little bit lower of bar 5? So you have a scalp perhaps if you sell underneath bar 8, but you don't have much room, and the bulls can turn that around and bring it upwards, and you could be stuck in a very fast moving bull bar. This is why I don't like to trade. When I see these, if you want to study this phenomenon, just go watch the bonus videos. First start with the inside outside II, OII is breakout mode. And then go watch the bonus videos within the Brooks trading course. There are 2 bonus videos. I think 2 or, yeah, there's 2. So when I see in outside bar, stuck inside bar, I do not do anything here, okay? Especially somewhere in the middle. It's a trading range basically. And this is a triangle. It's a breakout mode. And look what happened. If you were to sell under bar 8, what would have happened to you? So I warned you about this. Bulls are waiting at the lower third of bar 6. This is going to be inside failure. Since this is a micro, that's a 2-bar failure within the inside of this bull bar. So they're trying to close a bull bar now, and they could get a breakout. So targets are still valid for bulls, but they need to also close this bar bullish. If the bar doesn't close bullish and it suddenly closes bearish, then yes, we have a higher potential of getting a bear breakout from the bar 5 low. And that could quickly can bring us down to bar 1. So bears, okay, who got stuck here, they might have sold a close or sold underneath 7 if they were trailing sell stops. They want to bring, sorry guys, I keep losing connection for some reason. I don't know why. But anyway, bars is not, they want to bring market down here, not just a bar 1 high. Let me reestablish that connection. Really? So if bear's trying to close a bear bar here, that is not a good close. Bar 9 is a doji, but it also is not a bull bar. But you see, this is the problem trying to sell here. All these bears are desperate to bring the market down here. So what if it doesn't come down? That's because it's a bull flag situation here, and the bulls are not going to let go. They're trying to keep, just waiting for chart to update. The connection is not all there. But I'm reading from another chart, another application with real-time data. So if this bar closes bullish, then you have high 1, bar 6, and this is not a good high 2 with bar 9, but technically it is. So if we actually close a bull bar, we have a potential of breaking out to the upside now. So high 2 bull flag, possibly. And that's, I kind of warned you. I still don't know why this is not updating. This is the 3rd time I'm losing connection this morning. Not sure why it happens, but it's coming up slowly. So the bulls really need to close bar 10 on its high with a bull body. Then you have a beautiful bull flag breakout. Okay, is wanting to test the bar 5 high and a breakout further above into those targets. 83 is being your shallow target. But that would be, but don't be surprised if we actually get a trap around 79, 50, 79, slightly above bar 5, because it is about 10-point swing for bulls. See, aren't you glad you didn't sell anything here? Okay. So what happens to here? Well, then these bears are going to be forced to sell even higher. They're going to look for a bear bar, or maybe they're going to look for some kind of a magnet target. Then their price is that's the 2nd time they're entering. Now they're even more desperate than ever. And then somewhere here, they're going to try to see if they can bring the market down. So it's better not to be a bear when the odds favor the bulls in a big gap up like that. Now they're selling again. Now this time, this bar closes bearish, I'm going to be out. I don't know yet. It's still bullish enough to me. It's just very volatile. ATR came down, which is good, but it's still very volatile. It's 7 1/4. So I'm literally like using 1 contract. I'm not risking anything. So when it drops like that, that's still a lie. It drops 5 points so very quickly, is 4 points. You're instantly losing is, $200, $300, $250. But if you were in with multiple contracts, those sudden moves up and down could end up becoming $1,000, $800, more than 1,000. So just when the ATR is large, is keep the contract sizes small. Okay, you'll still be able to make good P&L. I'm not exiting out of this. I'm still waiting for bulls to try for the 2nd time. If they fail for the 2nd time, then I'm definitely going to exit out, because this inside bar makes me nervous. There's sellers below, and it's a tight trading range stuck, so they're selling above to break even. Is another failure for bulls. They tried once, they tried twice and failed. Now I'm out. So I exited this long, but if this comes down, there's a potential of me making some money here. I'm going to remeasure, right? So if anybody sold underneath 8, they're still eyeing for this, but I need strong bear bars. So it's still bullish. If I see a strong bull bar, I'll try to enter above it. But at this point, suddenly we get bear bars. I don't want to be stuck in that. It's the second time the bulls tried and failed, and that made me nervous. And the bars are moving way too fast for my taste. So there's a lot of scalping happening here in this trading range, but it is a breakout mode, and it is also triangle. Bulls are trying to break out. They're trying to break this trend line, which is good. But if anybody is long already, their stops probably underneath 4, if not down here. So normally I like to use the breakout bars lows, but that was knowing that the bears are stuck here and they started to sell, disappointed. They sold again. They're holding. This bar 10 close made me nervous. But if we break down trend line, then we're gonna get up there super quick. So I'm gonna wait for the confirmation, and I have a potential of entering again and making money. So bulls they need to do their best and not waste this high 2 breakout, but that bar needs to close bullish. And they need to close above that trend line. If fails, bears are looking to take out the 5 low, but probably buyers waiting there. If bulls cannot close this bar bearish, we're gonna come down to 66.75, 67, further down, 34.50, possibly. Only if they cannot close this bar bullish, bar 11. If bar 11 closes bullish, then we will quickly get back up to the bar 5 high. So I'm going to wait. And then we could get our breakout and test the 50.79. Okay, that's good news. Let's see if they can continue to push this higher. Still a tight trading range, but good bar 11. Kind of closed above that trend line. Above that trend line. So bulls need to push this and not close and not allow bears to close a bear bar here. It's a tight trading range, literally 1 bar trading range, about 7 bars. So machines are basically betting against every good bull close and betting against every good bear close in this tight trading range. So it's a 2-point, since it's a bar it's about, I don't know, maybe minimum 2-point scalp, possibly more. ATR is 6, so you have at least 4-point scalp in there. So if you actually sold a close, you made 3 points. Half the ATR is if you, I don't know, bought somewhere at the lows, right? I hate to use Is that, here we go. That's 5 points. So between the minimum 3 to 5 points scalp, but it's good close 11. Buyers bought above it and then bought at the low of 11 again. So now they're looking for is follow through. So this bar now, we need second bull bar above that trend line to get a breakout. My target is going to be 5 high, 78 and 79 above at the minimum. So I don't know if we're going to get the 83, we might. So 78, I'm going to mark 79. I like to see bulls get up there. Machines eventually, scalper machines eventually will stop scalping when they see the second bull bar. Okay, when they exit out, then we start to swing. So target is minimum bar 5 high, and then 78, extension to 79, possibly 83. So I am long, and as this bar goes up, I'm adding is contracts, and I'm looking for bar 5 high test. I will scalp there, and I will leave more contracts to reach 79 area. There's some kind of news coming up. 10:30. What is it? Oh, that's nat gas. Okay, we don't need to worry about that. Okay, we're right at the 5 high, but didn't really test the high exactly. There was a 1 tick failure, I think. Yeah. Still looking for bulls to get above bar 5 high and continue into the 79 and possibly 83s. Also, my measured move target still intact, 81.25 from 3 bull bars breakout, gap bars. Okay. So as it goes up, I'm adding, and then at these highs, taking profit, and then adding some more, scalping, leaving some. Okay. So I just scalped 1 tick below the high of 5, bar 5. And I'm looking for bulls to continue their journey high and test somewhere around 79 or maybe 1 tick below 75. So 78, 75. I got a little bit more contracts lined up there. Good strength I see here with 11 and 12. So I'm looking for bulls to get a breakout from 5 high. They're trying to block the breakout, but it's kind of too late for that. It's wasted effort, I think. We might get a wedge top, 1, 2, and it's really weird, but I think we might really need to get to the 83. I hate to do this overshoot with second leg up and then undershoot with third leg. Those are not my favorite wedge patterns, to be honest. Always throws me off. It's like, why is this leg undershoot? Are they trying to sell so hard that they're hinting me here that I should exit out of my long and I don't want to? But wedge is a wedge, and the way that L explained them back in the day when I was watching, so this is a perfect wedge, and there's nothing perfect about the markets, right? This is the perfect wedge. And then you get this one, undershoots, and that, okay? And then you get this one, overshoot, undershoot. This right here is like this angled head and shoulders pattern with a neckline right there. Okay, we could break it, everybody sells it, that's a deadly mistake. You look for a pullback and then sell, okay? That's what I look for. But that essentially is still a wedge pattern and a head and shoulders. You just have to get your eye trained to pick those up very quickly. All right, target is, I did say we're going to test 78, but I marked 79. So here I am. I'm about to scalp with 5 contracts here, 78, 75. And I'm going to look for a follow through into is 82.75, one tick below 83. But let's see if I can get this target. $79. Fed's talking about unemployment. 79 is still my target. I'm about to scalp one tick under and then leave another contract for 83. How you guys doing over there? You guys are too quiet. No one's posting anything. Hopefully you guys didn't sell anything here. I try to get your attention, how difficult it is. I got nerves. I was still long here, but I exited with 10, but no one sold underneath 10. So I bought again above 11 and held it 79. I scalped at the high of 5, scalped here at 79. I'm holding a little bit more for 82.75, which is 83, one tick below. But that's only a 1 contract, so it's good. But this is a 10 point, so some bulls will take profit here seriously. So you should have scalped here is pretty strong. Because after all, this is a wedge, okay? And this is higher than that, so that's still a decent wedge. And can we come down? Don't want to sell against 3 bars, 3 bull bars, probably buyers underneath 13 waiting. Or above 11 there's a little gap there, bull gap. If the bulls can maintain that gap, we're going to get to the 83. So I'm going to hold this runner. Okay, good. A wedge is a wedge, right? If there are any buyers here as early as high of 12 which is I think around either 77 or 76.75. No, it's actually 76.25. If there are any buyers here, that's good. But this is profit taking at 10 point. So I don't like this bar now. I'm contemplating on what to do. I think I'm going to buy somewhere down here. And as it goes up, I will exit out. That's still a profit taking bar. I'm not convinced that bears are done here. But if the bar closes on its low, extremely bearish, then we have a wedge top here. And we could quickly come down and test the bar. Is bar 10 low, bar 9 low, even 5 low. Only if we start to close strong bear bars with no visible lower wicks. Market first can come down to 71.75, 50.71 and 3/4, but it's only if we start to close bear bars here. So lack of closing bear bars, bulls will continue to go higher. Okay, that's not good. Let's see if there are any buyers here. That is an outside down bar. So I think the market is now coming down to 71.75. That's an outside down bar, but against 3 bull bars, some bulls will buy to close. They already did and gapped up. and others are trying to sell this into 71.75. I did say there are probably buyers underneath 13, and that's because they're stuck up here. They might have not taken profit, so they're trying to break even. Remember I said I'm still holding. I'm probably going to buy down here and try to break even. That's what's happening with bar 15. But it's an outside down bar. Bears want to bring the market down to 71.75, perhaps even further down into this tight trading range, back where is this wedge formation. It really is a triangle formation, and then probably buyers in the apex part of that. So the micro channel first sell, they're going to challenge that, which they did. But the whole point of challenging is that's because you have stock bulls, okay, buying a breakout point, and they want market to test here desperately. But they already bought the close of it. They bought so much that this bar actually bounced. So this has to go up to rescue them. I don't know if it's going to go up, but because it's an outside down bar, you have a very little time to exit out with whatever the loss you can recuperate, really make it back. So if you can't, then you know exactly where it's trying to go. It's trying to go right into this tight trading range, and it could continue to sell and test the 5 low, 9 low, or 10 low. So I exited with that long that I was still holding until 83, and I'm flat right now. I didn't sell this, but it's potentially it can come down to a little bit further, or we're going to find some buyers right here, maybe a little bit lower. Might come down and test the 50-70, or we're going to find buyers right here. It's just too big of a bar. It's trying to reverse the market back down due to that wedge top. So, but many bulls did not exit, so they will buy even lower. I'm not into that. Not when I see this outside bar. I already taken too much profit here, and I had a runner, a contract. I said I could get rid of it, but I ended up buying, and it went up a little bit. Didn't really give me all that excitingly, okay, bulls really want to get back up to the high. I'm out. So minimize the loss. Exit if I weren't talking, I would have probably reversed it instead of exiting out, and probably have made the money back down here. Two strong bear bars. We're right at the heart of the breakout of this triangle. Market probably wants to test the 10 low, and 10 low, it's the last bear strong body before the breakout began, but it could also come down to 5 low. Bears want to sell and break out from the 5 low, but there are buyers waiting at the 50% of this gap bar. So there was a small gap here. They closed it. There's a bigger gap here, and anybody who sold, okay, is maybe here is underneath, okay, 5 points above, also sold about maybe 10 points above. So no one's going to sell this bull bar. They might have sold up here with limit. Then 15 points, right? So bears who are stuck sold again. They want market to come down to the bar 1 high. So, but there are buyers also here waiting. Buyers waiting there. Buyers. Hold on, there's too many things going on. I'm just going to get rid of that. Here we go. Okay. It's good. So buyers waiting there. I don't care about that one. It's also here. So the reason why we're bouncing, okay, so that's the big ATR bar, okay, is so we came down to this, that's basically 33% of its range. They're finding buyers, but I did say that we're probably going to test a 10 low, maybe 9 low, maybe even 5 low. So if this bar closes bearish, we're going to come down to the 50% of this bar, maybe even down here, but still, if this bears exit out, we could still keep this gap open and continue to go back up again. So is the reason why we are stalling there because of this bar. I like to measure everything. I don't like to guess. So here is, actually I'm a little bit off. Here we go. I was a little bit off there. 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 Look at that. Just about. See? Tested that level. Is if they close a bear bar, we're going to continue to come into these levels. 65.50 and 63.50 most likely. That's what the machine's probably seeing. So they know there are always buyers waiting there in defense. But what they want is the test of 5 low is, and then no longer interested in that, is 5 low and a breakout and come down further. But so far 67.50 holding, but I don't know where this bar is going to close. If it closes below that, we're going to come down into the 50%, 65.50. I have nothing to anchor this. Here's my problem here. Maybe I can anchor it. Hold on. There's an expanding triangle. So then this is the target right there. I finally anchored it. So I think we're going to test that. Or, no, I did not well. No, I'm right. So that's the target right there. Also the last week's high. So we don't really need that. I kind of overdid it. Just get rid of. 67.50, perfect test, is, which is the 33%, is pullback of this breakout bar 4. Bulls are still trying to hold this area, but may need to go and test fully bar 5 low. What is the other reason? I've taught you guys this. You should know. You should know. Yeah, so it's 10 point. They kind of overreached the 10 point, but there's another reason. What outside inside bar combos range we are in here? Another reason. What outside inside bar combos range we are in here? Bar 5, yes. So is what zone we are testing? You know, there's a name for it. Trap zone is who's waiting in that trap zone. And this is the second time we're testing, right? So it's valid that we could bounce here. Bulls are waiting. Exactly. So it's the second time they will not allow, even though bars are strong, they will not allow clean pass through. Okay. So this is the reason why we're bouncing. It can still break it, but there's always buy orders there blocking bears from observing or cutting through that trap zone. Is Which was the first bar tested the trap zone earlier? Look closely. None of those answers are correct. Bar 6, yes. So bar 6 tested that, because if you actually throw your measurement there, its low is within inside, and the bulls showed up. Look how fast, because it's, but to me that's, premature. I can never know. But after the bar 6 closes, you kind of know. But now that you have more information, you can say, well, bar 6 was the first test, and we bounced, created leg 1, leg 2. Is now, and it's a bull flag broke out. So now we have a second test. Most likely, bulls are going to stop these bears. And then where exactly is the bulls are trying to test after trapping the bears here? Where do you expect them to go and test? No, 50%. Midpoint of bar 5 is what happens when they cannot test that. That means bulls are not strong enough and the bears are overwhelming the bulls, and that means bears are trying to get a breakout from here. So you wait for this bar to close to determine that. So I'm going to show you. You kind of got the idea. I'm going to get rid of these so we have a clean look, and you're going to see what I mean. Bar 5. When you can't find your way around, it's the easiest way. It doesn't matter. Get over your fear of not liking fib levels. These are not fib levels. These are levels that I have calculated over the years, figured out what the machines truly see, so I can trade with them. This is not a Fibonacci 6180 blah 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 trading. It's basically me dividing this range that we're stuck in traded sideways, finding buy zones and sell zones. Okay, so this is the upper, and we broke it, that trap zone. Look, trap zone tested for the first time. Actually failed, sorry. It didn't. This is the first trap zone, but they closed a strong bar. It sold a little bit and then bounced again. They got their target. So now it's coming down. Where's it going to go? Into the trap zone. Where are the bulls? Waiting. Exactly where are they waiting? Starting from here to here they're waiting. They're going to try to block the bears, breaking bar 5 low. Because if they do, they get a breakout. They can bring the market all the way down here. So that was the first test. Strong bulls finally got their breakout and reached their first target. Now the second test of the trap zone, right? What's happening here? Bulls are buying and making money, but they're in a scalp. Where do they want to test? Right there, 71.75. Okay, there are probably sellers waiting there. So what do you do if you buy in the trap zone with limit order? You scalp as it gets closer to the 50%. Because it's not guaranteed we're going to close above it and reverse this back up. Those bears are waiting there. Now, can I continue to use this now that we tested the trap zone? And now I have another outside-inside combo? No, we're done with this. So no longer use it. I'm not switching back to this just because we have a new combo. I'm switching back to because I see a new combo. But if we didn't test this breakout point and it was just a breakout but failed and came down, I would still be using this range, even though we have a new combo, new outside-inside. But because bulls actually tagged one of the breakout targets, and now I have a new bar 16 outside, I can use a fresh one and apply the rules here. So now what? We have bar 17, tested the trap zone from below and bouncing. Where is it going to go? First to the 50%, and then 79. They couldn't close above it, so it's not guaranteed we're going to be able to break out bullish. If the bar actually closes, but those limit order buyers bought, but it's difficult to say is, this what you could trade this. Why? Because you don't know this is an outside bar until this actually closes as an inside bar. So now, as a retail trader, you have more information to go by. We don't have, you could say, okay, limit order bulls entered, they tested. Now what do? Well, it's in the middle of the bar. There's still 2.5 minutes. If I buy this right now, I could get trapped because I don't know. There's no bar closing above the midpoint to say this is becoming more bullish to go and close above 79% and get a breakout. I don't know. So here's what I do. Nothing. I do nothing. Okay? Now, but I could do one thing. I could start to put sell orders here. And as price comes down, I'm making money. Okay? Until I no longer can. So because the upper trap zone has not been tested. It's a fresh zone. So most likely, this is a one big bear bar. If you go back to the Brooks price action trading, same thing is strong bear bar, inside bar with an upper wick, probably sellers above, starting from the upper third of the bear bar and a slightly higher. That's why we say, oh, there are sellers waiting up there. We don't necessarily give you exact level where those sell orders are stacked, but I'm giving you right now. So, okay, this is where you don't want to do anything inside, especially in the smack in the middle of this range. When you have something visual in front of you, it's like if somebody's telling you, yeah, parties at XYZ, street is on the other side of the town, which you just moved into town and you have no idea what this town look like. You've never driven. You have no idea, but somebody throws a map in front of you. You can find that XYZ town, okay, and the avenue, whatever, and you can even look for shortcuts, right? Or how to get there fast. So that's like, trading is like that. You need some kind of a roadmap, some kind of visual. So bars are great, but you also need to know where the cop cars are sitting at the corner of so-and-so. That means so that they don't trap you when you don't stop at that stop sign. Okay, so basically, bars will always want to trap you somewhere. But if you know what the machines are doing, you have a potential of scalping and making money and avoiding any traps. So, oil inventories just came out. So we have now 3 inside bars, but it's generally a sign of, it could create exhaustion if bulls cannot break out from the high. Sellers waiting there. Sometimes you only get 2. What's happening there with that bar? What is happening right there? You tell me. What are the machines doing? Limit bulls are buying. This bar just hit a wall of buy orders. Why? It's the second time they're actually testing inside. So if you were smart and you just paid any attention to what I just said, and you lace this area with buy orders, 2 of your orders are activated, and look how much you made. So if you entered here 2 orders, market went up there. Oops, sorry, that's an arrow. So technically, you made more than 2 points scalp right there inside. So that's a scalp. So the machines are scalping. Successful 2 points right there. Might have gotten a lot more. They got a 3 point, but it has to go 1 tick above to give them a 3 point. So they probably got the 225. So they got a clean 2 point there. See, it's not that difficult. And if you look at the time and sales, they were probably big lots of orders there. See how that moved so fast? That's because somebody or somebodies probably entered with 10, 20 contracts, and they're looking for 1 or 2 point scalp. They scalp 1 point, half of their contracts are 70%, and leave the rest to go to that midpoint of this outside bar, and then they take out more there, and they walk away with minimum $2,000 if they entered with 20 contracts. If they entered with 10 contracts, they made $1,000 right there with that little strategy. And then you cancel out the ones that in there did not get activated. You should not be holding anything. You're in with whatever is activated. You're cancel out the rest that hasn't get activated. Okay. I'm going to take a quick break and I'll be right back. Get some water. And that's a beautiful trap and swing where probably is, first we tested the 50%, now we're above it. It's the 50% of this leg right here. So we actually measured, yeah, is smack on the 50% of this bear leg. And because think of this as a larger outside bar followed by inside bar, right? So it's, I don't know, maybe 10 minutes. I don't know. Yeah, it's right there. See how that worked out? That's an outside bar, inside bar doing the same thing. Trapped, if you're trading 10-minute charts, and tested this midpoint, a little bit higher, but doesn't matter. 66% is right there, upper third of this outside bar. Sellers waiting. When Brad says sellers are probably waiting up there, not so far away, that's what he means. It's pointing out approximate area of upper third. Okay. So bulls actually reached their target, but this is not a breakout. This is just an instant. Take that as a breakout, but they did something that allowed them to reach a shallow target, but that doesn't mean that this is a bull reversal. Now, it's another reason for these bulls. The reason why we reached there so fast, if anyone who was still long, both down here, maybe the close open of this bar, look where they ended up is break even with average price right there. So things are happening for a reason, and bars are going into one area and then reversing. It's calculated, okay? It's machines now. They calculate faster than you can say your name, okay? So there are reasons why we got an instant rejection, because many of the bulls got stuck there, exited out. But if we now start to close bull bars above it, market could go right back up again to where they are there. Maybe we could test if they entered right up here for 12 high. We could even go and test the 12 high. So now we get actual breakouts. We're going to get above 123. That's the next target for bulls. But they have to close above 123% to get a follow through. That's the next target, and could even go up to 76.50. But there will be a lot of scalping here first. That's a VWAP. I use a VWAP. How about this one? There you go. We're going up there. So I bought it, and I made this decision. I'm buying this, and I already scalped here. I have a little bit more I'm holding for this measured move target of the range of bar 16. Can market be forming a head and shoulders pattern? Is what happens if we cannot close a bull bar right above 76.75. We might actually go and test above it, but if we start to close bear bars underneath, that could end up becoming a head and shoulders pattern. Bulls are trying to break and continue to go to 13 high because they're stuck there. Next target is 76.50. Like I said, you should pay yourself there. Even if we breach a little bit above, there will be a lot of profit taken there because you're in a trading range and we're just about at the upper third of the trading range. That was your 20 is around here, or if you bought above, that would be your 20 points. You can have these on your charts. I'm going to keep the chart clean. Bulls trying to break above the left shoulder and invalidates. They need to close bull bars. Otherwise, this can still turn into a head and shoulders pattern, and market still can come down and test the bar 1. Bulls want to take out the 14 high, and they want to continue buying. So we just got the target here. I just scalped there once again. Looking for is now the high of 14 taken out if they can close a bull bar here. But there is a wedge top here, 1, 2, and 3, and maybe 1, 2, and 3 micro we are forming. We're still inside is the last week's range trap zone. Bulls are still trying to go and test that 80.75 area. But we close above it, an hourly bar. We're going to keep buying because this upper trend line, I had it for weeks on my daily chart, is my projected bull targets on the daily. So, I mean, everything's bullish. We need to close below 76.75 is with a upper wick and then a bear bar after that. Then I can say we have a neckline here and the bears will break that from 5 to 19 low. I don't have that set up yet, so it's still pushing towards the bar 14 high. That's because bulls are trying to make money with their original buy or the contract that got stuck there. So it's what happens if we go there but not able to close a bull bar and suddenly collapse? Then you form a head and shoulders pattern. But that body closes at 1 tick above 13 high. We're going to make a new high. So here's a trading view chart for those of you who want to create a RTH chart. So this is an ETH. Just select the regular trading hours, add this. Add this indicator I think there's a much better indicator for bar numbers that actually are a little bit higher, closer. I cannot adjust the offset pixel count where these numbers plot. So there's a little bit of gap, but it just does the work. And I have an EMA for 20 EMA exponential, and then the 200 EMA, which is this, which is equivalent to the 1 hour 20 EMA. So we are very bullish, and you can use this as your, okay. No, let me, like if I sell right now, and stop loss, I'm gonna try to see if I can make a little bit of money there. But this is paper, some paper trading, just so you know. But it's a great way to, except I don't know why it just plots here. I want it to plot a little bit further. Let me see. Paper trading. Yeah, I'm extending. Oh, maybe that's what it does. I don't know, it didn't extend. I don't know why it does that. I want it to extend a little bit to the left so I can actually see what the heck is going on there. But anyway, you can test your knowledge, skills. Okay, so I quickly sold and I'm losing money. Trying to make a $500, I'm already losing 150, and my risk is similar to the reward. So you can see this is a scalp and not a good one. I mean, I just did it quickly without even thinking. Normally you should be buying, not selling, but you can also exit out. There's no flatten button. See, this is not a good, just get a better application. It's not all that great to, maybe I don't know how to use it, but that's how you create, okay? And then you save it, and that's done. We closed bar 22 above the left shoulder. So what does this mean? It's an invalidated, okay, head and shoulders. That means we're probably going to make a new high here. You have a new outside-inside combo. 22, 23 inside, 22 outside, fresh. So we're at the highs. It's also a triangle in a smaller time frame. 23 being the inside bar, is market will test. It's low, it's high, is probably buyers down here. You got multiple bull bars, but we will test the 22 low probably. Bulls want to break out from the 22 high. So you should always look for is buyers somewhere down here. Okay, so my paper trade is started to get safer, but it's still losing $100. But there is the wedge top 1, 2, 3. Bulls want to make a new high, which you gotta wait for that, I think. So you can see they're gonna hit my stop on the paper, which is a great way of testing knowledge. When I was first trying to trade, I had a sim chart in front of me next to my self-funded account. So what I would do, I would first open the trade if I'm not 100% sure in the sim environment, and I see that it's going against me, I'm losing on the sim, and then I would open the opposite trade on the other actual funded account and end up making money. And it was a great way to test your, okay, so this is where I did wrong, but I'm losing in paper. It's because I was supposed to buy here, not sell here. So or you can see, you open a great trade and you see where the market is going, and you can open the same trade on the funded account or whatever your self money account. So it's a really good way to practice paper. So if TradingView is your thing, then use that, or use any other application for sim trading. That's a wedge top, 1, 2, 3 is also wedge, or wedge double top. Bears want a major trend reversal, but it needs to start with strong bear bars. But first we need to trap the bulls, I think, would be better. A higher high double top major trend reversal would be a lot better setup, but it's not always shows up, right, as a higher high is double top. So this one is lower slightly. And if we create a bear, if we print a bear body all the way down to the close of 23, there will be sellers because they already entered with limit order above 23. Now, stop order bears want to enter, so they're trailing their sell stops from under 22 to 23. And when the stop order bears are entered, we enter in a swing trade. Okay, okay, so I'm making money now on my paper account, but I don't still see the stop order bears entering the market. Those bears now trail their sell stops underneath 24. They already see that the limit bears are making money. They sold and making money, but other bears are not really entering. So it's still, bulls are in charge, but they are parked their sell orders under 24 and waiting. If this bar takes out the 24 high, then no bear will enter, and then we're going to keep going higher. So swings are not created fast. You got to see the limit and the stop order bears all entering at the same time. It creates a frenzy. Then you start to see sell the close bars. Otherwise, you're in a bullish market, and it's just limit order means it's a scalping market. That means somebody sold up here and scalped 2 points. That's all they got. So smart traders, they are going to keep trailing that sell stop order, but they see that the highs are taken out. They will cancel that stop order. Bulls want to break out from the high, and their target is 81.25, I think, or 81.50. They want to test that. Maybe a couple of ticks under, maybe a couple of ticks under. But they haven't really taken out the 24 high successfully. But almost there, so let's see if they can actually take that out. If they do, they're going to accelerate into first breakout target of outside bar 22, and that is at 50.80.25, 50.80 and a quarter. And furthermore, for swing 14-15 point is swing continuation for bulls is where I marked 81.50 and further above around 82.50, 82 area. So I've reversed the paper trades and started to make money and tripled the 2 contracts that I had. And I mimicked the same thing on the actual. So I scalped the actual target, actual cash account. And I now also made over $1,000 on the paper account. So I'm trading them side by side. But once I see that the bull's taking out that bar, and I said, okay, I'm not going to make any money selling this. This is done. There's a little reverse button you can use both on Ninja and TradingView, and you simply just reverse. And I tripled the account on this one because it was only 2 contracts. So you just test your knowledge. We made a new high. We haven't really tested 81.50, but look what we tested. I said a couple of ticks under we're probably going to test, and that's a 1 tick failure. But bulls will probably going to get that 81.50 and further above. And further above. Excellent. So now I made money on my paper account and both cash account. Life is good. That target is that. We don't have a bull climax day. It's just simply a bullish trend. Is the only problem with this bull trend is that breakouts are not all that clean. You get a nice breakout, but you're not getting a good follow through. You get a nice breakout, you're not getting a good follow through, but the gaps are open. Now here's a breakout. Gosh, this actually took a long time, but where is the follow through? So now we have 1, 2, 3 wedge top. It's possible that the market could try to come in and try to close this gap, but there are buyers at the 21 body area, so they were not allowed too much selling. Even if this comes down, okay, and breaks this trend line, tests the high of 18 is, or the body gap of is, I'm sorry, test the high of 20 or the body gap of 21, there will be buyers waiting around here, okay, to block those bears. So we don't have this necessarily because we don't have a climax, okay, is buying to get this kind of sell-off. Now here's the head and shoulders pattern I talked about. Is this is a higher high. Can we still sell? Is, I don't know. Bears need to surprise us. Like we need a surprisingly strong bear bars closing to create gap bars back to back. Then the first pullback will create a bear flag and we could sell and move underneath the EMA. But as far as I'm concerned, this is yet another breakout. Even if this breaks the trend line, buyers are waiting right here and they will try to defend this gap. Is they're probably buyers in this area. Bears kind of lost their chance to create this small but mighty head and shoulders pattern to create this swing down. So we may not actually sell until bar 40 midday reversal into EMA. It's been 20 plus bars, really 25, 26 bars gapping. Eventually we will come down to EMA and we will test the EMA. But the first touch of the EMA is going to be a strong bull bounce unless bears actually create surprisingly big bear bars gapping down above the EMA, okay? And then the first bounce from the EMA could create that bear flag to move underneath the EMA. And we could actually test the open of the day if that happens, which I didn't put it there, so I'm just going to do that right now. So we may need to wait until, I don't know, bar 30, 38, 39, 40. If we keep making new highs, can't really sell. And if you do, you have to be aware that probably buyers are waiting in this zone. So here's a higher high, a major trend reversal. You see these surprise bear bars and a double top neckline. Where are those surprise bear bars? That was the trap, but where is it? It's not there. So as far as I'm concerned, we're still on inside a bull trend channel, and we haven't really exhausted. But look what we're testing. We're testing these slightly above the gap. If this hour has 47 minutes. If we start to keep going higher above this and close a bull bar, we're not going to stop. We could keep going higher. We could buy every pullback. so far is market is bullish, but if we start to close a bear bar, then we can pull back, but we don't have that. So it's not a small pullback bull trend either. It's got valleys and peaks. So basically it's a trend. Okay, so you have a bull trend above the EMA. It's going up, pulling back, going up, breaking out, pulling back, but keeping the gap open. Okay, making a new high. And this one, I don't know what the heck was going on there, but it kind of closed the gap there. But this gap is open. So basically this right here is this. Okay, so now we have pullback, breakout. There's a gap here open. We keep that open and we could keep going higher. You can't really sell unless you see a good setup. I want to check something. We are getting closer to my target, but remember this is a 30-minute chart, so that means bulls really keep pushing this higher. That's 80. Target is around 121. That's a lot. That's 41 points away. Can market make another 40 points trend to upsides? Yeah, we could. But we really need good bars after the breakouts. We need good follow through. We're not getting that follow through. So maybe we can come back to EMA and go back, I don't know, or pull back and find buyers and create another 40-point run and then reach my swing target. It's still doable, but these breakouts are bad and we have a wedge top here. Okay, so take caution, and if you're long, stay in your long. We now have a outside insides, a new combo, which is bar 2627, and now you have, could be an II, and if that's an II, could reverse, but we don't know. So far, bulls are still pushing higher. We haven't tested the trap zones, neither of them, above and below, or at the low or at the high of 26. Bulls are looking for test of 26 high and a breakout yet again before coming back down. If this comes down towards the low of 27, buyers will be there and they will buy quickly. Testing the inside bars low, but it needs to test the 26 low. So we just tested the trap zone, already started to bounce. If you throw your levels by using the 26 range, but you get a wedge top here. So bears want to sell this into that green zone. They want to bring market down to bar 20, is bar 19. But we need surprisingly big bear bars closing on their lows. So no one's going to sell anything. They're going to buy every pullback until they exhaust their options and they start to see big bear bars. Buyers are not so far away from 26 low. I'm going to open the question box. Brad Wolf will join this afternoon. So, okay, so they have a breakout from the whoa. Okay, so you see what I mean? That's a surprisingly big bar. That's the wedge top. So now we're coming down. That was huge. I mean, that jump, that's very surprisingly big bear bar, but they have to close it on its low. Next bar will be sell to close most likely. They're trying to close this gap right here, but bulls will defend here, okay, at the lower third of, or the midpoint of 21. But if that bar closes bearish, we will come down and test the 19 low. And I don't know if we're going to be able to test the EMA, because I think it's a little bit premature for us to say that this is going to move underneath the EMA, unless we close a really strong bear bar with a smaller lower wick, and then the next bar is actually a sell to close bear bar. Then you can say, okay, we might even not only test the 19 low, we could actually move underneath the EMA, but the area is a gap, and there are buyers always defending. So if the bears cannot close this bar on its low, we could still go right back up, because it's the first break of the trend line, and the bulls will try to fade the first bear bar breaking the trend line. Trend line break, really strong. It's actually closed below its midpoint. Body is bigger than the lower wick, but that lower wick is a problem. So it's can they sell this? If the sellers show up here and they fill the lower wick with another gap bear bar, they're going to have a higher probability of moving underneath the EMA and turning the day into always in short and testing the open of the day tick price. We don't know that. All I know is that the bulls will try to fade this, and they will try to get back to the 27 lows. But it's a big bar, could be point of no return for bulls if we fill that lower wick with a bear body. I'm not sure what you mean by that. I mean, I can't really. I'm applying the Brooks trading range methodology to everything that I try to open here. So comparing the trade, the success rate or the win rate, this and that and that and this, and whether they're converging. I mean, I don't know. You can do your own research on that. I'm reading the wedge tops. I'm looking at some breakouts. I'm reading the limit order market versus stop order market. And I'm looking at the outside inside bars, and look at this. We're all the way at the top and we have a wedge top, and you have an outside bar and an inside bar. What do you think is going to happen here? It's most likely it's going to reverse, right? So we have higher high, and the market could try to reverse even and come down and test here. So do you think I'm going to buy somewhere down here anymore when market pushed this much? No. I'm already long. I'm going to look to take profit most likely. Now, if I'm not in a trade, I have to think of that. Okay, there was a leg here. That's a pullback. There's a second leg. That's a pullback. There's a third leg. If I've never done anything and I just came to my computer, do you think I'm going to buy here? No, I want to see a breakout. Then I'll buy the pullback. I said this is not a small pullback bull trend. I don't know if you guys heard me saying that. So I'm looking for wedge reversal, some kind of exhaustion. So I marked this area. So what can I do? Well, if I've done nothing here, that I wasn't long, that I wasn't short, and I want to do something, I find that gap bar, and I find where the limit buyers are. So I could lace this area and maybe down here in the middle and there. So I would be entered with 2 contracts, and I would be making money with 2 contracts. But look what I'm buying into. I'm buying into this bar. So eventually I have to scalp, because this could fail and continue to come down. But if I actually bought where the gap is, I could still make money, even if I didn't trade any of this and just came to my desk. But you see this bar closing below its midpoint, even though it's got a lower wick, it's not going to attract too many sellers, but therefore you're probably going to get buyers buying the close. That's because there are many buyers stuck up there. They're trying to get a break even. So the bulls will try to push towards the 27 low. But if that gap stays open, and so we're in the last minute of the bar's longevity, and bulls fail to close this gap and tag the 27 load, that could be a point of no return for bulls. And as they exit out of the market, I will get a chance to sell this into the EMA. But when you have 20 plus, at this point it's 29 bars away from the EMA, is, bears are trying to get a couple of legs down to EMA. So you have to weigh in your options. Is this too high for me to buy? How about a gap bar? Yeah, I do have a bear gap bar here with a semi-strong bear body. What do I do here? It's been more than 25 bars. It's the 29th bar. It is possible that the market is trying to reach the EMA. So maybe I need to wait to see how serious the, bears are. This right here, I probably wouldn't sell because I know they're stuck bulls. So I would probably buy and scalp, okay? And if I see the bulls actually taking out to 27 low and overlapping with the body and close a bull bar, then I know that this bull trend is not over, that we're going to make a new high. So that's not clear to me either. So basically all I'm here in a scalp mode. So you can people are so thrown off when I start to measure bars and they're like, wait a minute, I'm learning something new. You're not learning something new. It's all in the course. Al talks about the outside and inside bars, where the breakouts are going to be or where the bar is going to go and test. So I'm just giving you levels, okay, and lay of the land, why we would be, moving towards the bottom of that bar rather than going to the top of that bar first. So I'm showing you that, and I'm also showing you where the buyers and sellers are ready to trap you. So you don't have to use any of that, but basically you don't have to compare the methods thinking this is a method of something totally out of box, has nothing to do with the course. It is part of the course, like me point counting. It's basically, have you ever heard Al say, from this bar, if the bulls are buying, they're going to have to go 21 ticks. When you convert that to points, what does it come to? So it's basically is 5 points an extra tick, isn't it? So it's telling you, in order for us to swing, there will be a 5-point scalp there. If the market gets that scalp at one side in the direction of the price moving, and then they start to close more bull bars, that means you have to look for a now swing in that direction. So all those calculations, I'm doing the same. So, the question that you're asking could be valid, but, you have to test those out and decide what your win rate is. So I can't sit here and look at the inconsistencies. What is the inconsistency? So I'm pretty consistent telling you that there's an outside bar and there's an inside bar. So what's so consistent about it? You're going to be stuck in that outside bar's range for a while. If you really want to trade inside the range and make money, you are in a limit order market. You have scalping opportunity, not swing opportunity, because you're stuck in a range. So what does Al tell you? Look for a buy zone. Where's that buy zone? He consistently tells you that buy zone is at the lower third. Where's my trap zone? It's right there. But I give you pinpoint level what the machines see. So it is up to you to put a buy order there. As it goes up, you scalp and maybe hold it all the way to the upper third and then scalp there before they sell from there. So you have to trade it as a trading range in a micro level. I can't do is this consistent versus what Al's saying? I'm trying to show you how I find those zones by measuring the bar and pinpoint exactly where I put my orders. So it's up to you to use it. You don't have to. When I see gap bars and if I'm, say this is high, right? And let me see if I can actually show you. This happened way too quick, but show you this. So here is your outside insides, right? Here is, I measured that. Here we go. We didn't really test. Remember I said probably buyers underneath, probably sellers above. We didn't even test, but the one thing it's glaring at me is that I have a wedge top here. Okay, I have a wedge top right here. So it could be this inside bars could create a sell pressure, and anybody who bought down here probably exited as this bar started to move underneath right here. So now they accelerated. That's so fast that you can't really do much anything about. So what do? Right? Here is, if you're trapped, say you put a buy order right there, right? Market opened here, went up, came right down here, broke that 50%. It's coming down so fast. Didn't give you a chance to actually scalp and exit out as you bought somewhere here. Then they closed. What are you going to do? How are you going to fix this trade? If you're stuck in this trade that you went long, is you bought somewhere in here at the low of this bar, 26. You're going to wait for these guys to reach, okay? And you're going to have buy orders and you're going to try to break even. So if you actually bought somewhere here, maybe you got, and then you buy maybe somewhere here. Did market give you, or even here, look, if you bought maybe as early as right there below, okay, or somewhere here is, or right at the top of the trap zone, 11%. Here, let me get rid of this, is, okay. Look, you bought right there, limit order, and then this bar happened. Oh my gosh, this isn't even bouncing. I am stuck. What do? You're going to hit close? No, you're going to allow these bears to come to their targets, 23, 61, 100. Then you're going to put buy orders there, right? So you put a buyer. Maybe you bought right here, second target, okay? Or maybe if you bought right here, you didn't really break even, but it came down here anyway, bar 28. But look, break even, 29. Look, break even, 29 and 30. So what does that tell you? You can use these levels to scale in and exit out. You're going to lose something, but at least you're going to minimize the losses. So now this is probably going to go right where you entered, where all these bulls entered. It's probably going to want to go right up there. But let's talk about that. Now, how do you know there are buyers here? Look left. There's a gap here, okay? So to me, gap is from this bar's close to this bar's open. And that's where buyers are anyway. Maybe it's the 50% of this bar gaps range. Maybe I need to put a buy order right there. So say you bought there, and then right at the 50%, you put a buy order there. Look, with 29, with 30, with 31, you are breaking even. Market is giving you a chance to fix it. Look, that 50% of this gap, look at the accuracy. Look at that. Even with that, you are getting your break even. So now if you want to compare these, inconsistencies, I find consistency every day, pinpointing exactly where those machines are sitting, waiting to buy and sell, or how they're going to scale in. I found consistency, but I just don't, I don't think I can, I'm using the Brooks methodology, so, and the techniques that I've learned. I just interpret in a way, I look at everything from the machine's perspective. It's not the trader sitting next to me. What the machines are going to do. What do they see? So that's something that, again, I learned from Al. This is the way that I automate it. Anyway, next question. I think the question that Britton asked is, do you use gap bars to scalp with or for possible reversal targets? Yeah, I mean, I use the gap bars. If there's a bullish gap bar here, there is a buying pressure sitting there, or a wall of buy orders sitting there. I like to buy into that. Okay, so there's that. So for example, is I saw this bar was coming, I sold and immediately took profit right here. I was scrambling to hit close. Should I do close? Should I do buy bid, buy ask? So I just hit close and it gave me great amount. So now, if I weren't talking, I would have buy order and I'd be buying. Where do you think they're going? They're going right back to where everybody bought, at the lower third of bar 26. Look, every person who bought here, even if they didn't scale in, market gave them an exit. Look at that bar where it hit the top of the trap zone. It's also the breakout point. Now, there's no bull body closing inside this range, but this range now I see that is no longer relevant. Why? I got another outside inside, and this outside bar reached its target, so I no longer care for it. I've got a fresh one, so I'm going to use that. Look, is from the outer edge of the trap zone, bar 31, bulls trapped the bears trying to sell. First breakouts. Everybody bought that. Now it's closed above the 50%. Where is it going? It's trying to go to the 79 and then to the upper trap zone, and it wants to close this gap and wants to test it. If the bulls are able to close the bar gapping, the bear bar gaps, what does that mean? It means we're still bullish and we'll probably want to make another high. Or we're going to make a double top and then come down. It could be double top, lower high, double top, higher high. But bulls are trying to close the gap. So I did say we're going to go and test the 27 low. Took a little bit longer, but they closed the 31 above 50% of the outside bar 28's range. That's good. So that means they're trying to get to the 79 and 89% area. Since that area is a trap zone, upper third of the outside bar, who is waiting there? Bears are waiting there. So this is a trading range, right? And the way that I learned that a trend is going into a trading range. Now, don't think of trading ranges as straight boxes, okay? It's like this, goes up, down, finally squeezes out or squeezes down. Trading ranges can be in angled channels, okay? It could be like that. It could be like this, a little bit more. But look, if we get a bull market, then you get the bar 5. I'm wondering, is this a pullback bar, or is this telling me something that we're going to be sideways for a while? It's a pullback bar. That's number one. Bulls try to buy it again, but there's no breakout. Because of a lack of a breakout from its high, market goes sideways. Okay, so now you're in a trading range. So this is now what made this a trading range? Which bar made this? Bar 5. So what does this mean? That means bar 5 is telling you when the market returns to the bar 5 lower third, buy. When it returns its upper third, I don't know where the upper third is, but I'm guessing there, take profits. Repeat it at least twice before you look for a breakout. Okay? Because in a smaller time frame, right here, you have a leg 1. Actually, sorry. You have a leg 1 for bears, leg 2 for bears, and leg 3 for bears. And the 50% of the trading range, bulls are squeezing bears out of the market to break out. They did, but it's still a trading range. Breakout failed. So now, this trend is not all there. Now they have another leg, okay? So we must be in a much bigger trading range. It's sideways and angled up a little bit. So now what am I seeing? I see possible leg 1, leg 2, and a leg 3. If you put, okay, here. Go watch my presentation from the how to use the encyclopedia or search for, I forgot the title, you know what I'm talking about. I have a trading range days or any trading range, how to trade them. Just go watch it and you'll learn. So look, what am I looking for? So I outline my channel or trading range, and here's my 50%. Okay, here's my leg 1, here's my leg 2, leg 3. Here's my leg 1, here's my leg 2, and we're in the leg 3 of a bull move. It's about the test. What happens when the bulls and the bears get 3 legs? That's what I count. I start to anticipate some kind of a squeeze and a breakout. I don't know from where, but I use the 50% line to gauge or anticipate where the breakout is going to be from. If we stay above, if the third leg goes up, we come down slightly and we start to break out, that's the breakout direction. However, this is the leg 1, this is the leg 2, this is the leg 3, and then we close below it, and then we stay below it. That's going to be the breakout direction for bears. So that 50% in that channel is important. So this bar 5 is the reason why we had a smaller trading range, which morphed into a bigger trading range. When you see this, you know market is going to go sideways and up because we're gapping above EMA, so it's sideways and up. But it's just there are sellers waiting at the high of that leg, there are buyers waiting at the low of that leg, and that's how you figure out where to buy and sell. Okay, and here's another way. Let me clean this up and I'll show you. So you determined that, say you don't see this, but you see this. You determined that there is a trading range. Okay, I'm going to use the trading range. I use hotkeys. Like I'm going to anchor it from that high, bar 1 high, to that bar 16 low. Now I have a midpoint. Okay, I have the low. This right here is the lower 25%. That's the upper 25%. If I'm buying in here, okay, I want to see a bull bar closing above that gray line. And I'm going to buy it. I'm going to scalp here and I'm going to leave a runner, but I'm going to take profit at the upper 25. Look, it's beautiful. Buy, buy, buy. Take some profit here at the 50. Now we just tested the 25%. What do you think is happening there? They already started to take profit. That's why you got that upper wick. Look, they took profit and then profit taking continued, but the bulls are holding the line at the 50%. So that means we're going to go and test probably the high, the upper extension 25. This is the inner. Inside this right here is the inside 25. This right here is the outside 25 breakout. Probably we're going to go test it so you can take profit there. Why? Because it's angled. We couldn't even tag. So what do you do here? Well, if you are still long, okay, and this bar happens, you're still long. They keep buying in here. And then finally we get this. So what are you going to do? You're going to buy again, and you're going to hope that you can break even at the midpoint. And you just got to break even. So if you were still long, okay, and you got stuck there, and then this bar happened, where's the lower 25? Right here. Maybe somewhere in the 50%. Look, I buy again, break even, and it even goes to right there. So it's just trading, range trading, utilizing the lower, even if it's an angle, or utilizing the high upper third for taking profit. Or if you want to sell, then you put a sell order there and you take profit right here. Sell order. buy, or buy, sell, so and so. So now we're at the 50%. Are we going to get above that 50% or are we going to fail? Well, I just showed you guys. If we have 1, 2, 3 is bulls 1, 2, 3. We're stuck at the 50%, aren't we? So what happens? We start to close bear bars. Can we actually break out? Yeah, we might. So where do you think it's going to go? If we start to get bear bars, okay, and we get a breakout, we're going to test this line and we're going to test that line. But I don't know yet. You're smack in the middle of a trading range. You do nothing. If you haven't bought here and you haven't scalped here and you're not holding a long contract to go in here, you're flat. That means you take no trades here, okay? In the middle of something is a trouble, right? So these bulls bought, they're taking profit. They don't like the fact that the 33 closed bearish. Now, if they see a bear bar taking out that gray line, they know bears are going to run this into that black line. And then if they get a breakout, then this is a squeeze to the downside. And most likely, market could is reach here and here before bouncing again. I do nothing here. I simply watch. Some people are really great at seeing this without drawing any of these lines or channels, or they just simply see it because they visualize faster. They visualize the whole thing faster. Okay, that's good for them. I can't. So I have to draw these things to figure out what the market is doing. It helps me better. So hope this is helpful. So the first question that I'm not going to say the names. I shouldn't be saying the names. So the question was asked, do you think win rates for your individual trades and win rates for trading days should converge, and we're doing something inconsistent if they diverge greatly? This is actually a great question. It's just that it hurts my brain. And I'll be honest. I'm like, how do I answer this question? So if you're several ways I'm looking at. Am I using the right methodology, okay, to stay consistent? That's why I went into that. It wasn't ranting. I wasn't ranting. But I'm just trying to figure out, am I consistent in my approach of trading? So, for example, this is a trend day. So he's asking, trading days, okay, for trading days should converge. I mean, look, I'm trading this no matter what, okay? So no matter what method I'm using, my goal is to open a trade that gives me minimum 1 to 2 points, if not 5 points, right? And I would love to strive more than 5 points and get some kind of a swing trade in 10 points minimum. So I keep doing this, and I hope that I'm opening the right trades. If I'm opening the wrong trades and I conclude that I am wrong in this trade, I have to also take action and end that bad trade, right? So before it gets bigger and bigger and bigger. So, so that means I didn't utilize the technique. I didn't see, maybe I saw something, but I entered the wrong way, and I'm too stubborn to hold it, not admit. So first of all, you got to get that out of your book. Stubbornness and trying to, win against the markets, okay, you can't. You're going to lose all the time. So that's inconsistent behavior. But if I'm applying all these methods, whether the way that I interpret what L says or exactly like what L says, and, 6 out of 10 trades I'm winning, I'm good, or 7 out of 10 trades I'm winning, I'm even better trader. But if I'm only utilizing only winning 4 times out of 10 times, eventually I'm going to break even, probably not going to be able to win consistently. But since this morning, it's already 19 minutes after 12 and Brad needs to come in and I'm already taking over his time. But since I have been, what did I say? I'm not selling underneath bar 1. I'm not going to do that. And I said, we're going to go and test the bar 1 high. And we got a breakout. I had targets. Did we reach some of those targets? We did. I did not sell here. What did I do? I kept buying and I said, here's high 1, high 2. So I'm applying what I've learned in the consistent way possible to make money. Okay, but here is, I got, where was that? I actually had to reverse somewhere. Maybe it was around here. But even then, that turned into a winning trade. I said we're going to come down and test the bar 9 or bar 10 low, and which we did. But I said there are buyers waiting at the low of bar 5. We're going to trap the bears, so look to buy. Okay, here's a trap. And you buy, and they had a swing trade all the way back up. Here's the 80% of the time, anybody stuck here will get an average, okay? And then 60% of the time, bulls will get back to the original entry, and is either above 12 or 13, and they will make money. And I said, we're probably going to make a new high, which we did. So everything I did is okay, but in between, I had 2 trades went against me, and I didn't want to lose, so I quickly reversed and made money to the downside. That's something you have to work on. It comes with experience, okay? So it's taking quick actions. But I've never sat there. See, I bet the person who asked this question, and that was the very first question came in, he's probably an engineer, okay? Because only engineers ask these kind of questions, because they are notorious on back testing, and that's why this is actually a very good question. I'm glad he asked this question, but this is the best way I can answer. So I am done with my session, and Brad isn't on the calendar. What do you mean? I thought Brad was coming in. No? Oh, I think the calendar changed the other day. Wait, I heard somebody.
Yeah, I'm here.
Oh, okay. Well, thank you. I'm sorry for taking your time here, but I wanted to answer.
No, you're fine. I'm doing some things.
Okay, I'm done. So you guys are here for Brad now. Bye, everyone.
So obviously, big gap up. We broke above the 5,000 round number, and we gapped up, and we're channeling to the upside. Although it's a fairly weak channel, it's mostly a trading range. If you ignore bars 2, 3, and 4, it's pretty much just a trading range day. But obviously, we're always in long above the moving average. I want to say something, and I may have missed part of this question, or Rose may have been answering a different question, but it had to do with, do you think win rates for your individual trades and win rates for your trading days should be converged, and are we doing something inconsistent if they diverge greatly? And it depends on the way you're trading. Most traders should focus on really starting out with trading breakouts, understand breakouts and how they lead to second legs. But a lot of traders, the more you start trading, they start to add more tools, if you will, to the tool belt. You can call it systems, you can call it methods of trading. For instance, if you think about Al likes high probability trades, but he will occasionally take lower probability trades. He might buy above a bull bar, maybe buy above a bar like 2, buy above a bar like 3, or take some sort of higher low major trend reversal. But overall, you have to measure trades. You do want to measure trades and make sure that it's adding a positive, it's increasing your trader performance. So if you have, long story short, if you're trading breakouts, but then you're taking very low probability sells, like you're selling below this bar right here in tight trading ranges all the time, it's going to damage your results, and it's probably not going to lead to more of a profit. But overall, and to add to that, this might be where Rose was talking about as far as stop and reverse trades, traders understanding when a trade goes wrong that should have worked. You see Al talk about it a lot, where they'll be long. They might be short above a bar like 2, and then when 3 closes, all of a sudden reverse to long, and that's why 4 reversed up. If you look at it, you could argue bar 1 should have had at least a small second leg down. However, bar 2 is a problem for the bears. It's a strong bull bar closing on a tie. It's a high 1 buy. Most high 1s have at least a brief pullback. But look what happened on bar 3. There was no pullback. It just went straight up. And a lot of those bears that were short concluded that this is a bad short. And that's why 4 broke to the upside. The way you understand that and the way you learn from that is you have to understand the math behind the individual trade. So let's talk about what's going on right now, and then we'll go back to earlier today. So what's going on right here? If you read the blog, I mentioned there's probably a 75% chance we're going to have a trading range lasting at least 2 hours before the end of the second hour. Obviously, we're more than 2 hours into the day, but I think the trading range started somewhere around here, bars 5, 6, 7, somewhere in this area. So 24 bars later would be we've had pretty much the 2 hours of sideways trading. We have a tight trading range, possible wedge, 1, 2, 3. But can anyone tell me the problem with this wedge? Is there a 75% chance that the market's going to fail up here and lead to 2 legs down? Yes or no? Who can tell me that? Do we think there's a 75% chance that this is a wedge that will lead to 2 legs down? Or are there issues with, okay, so people are saying no, and that's good. So what are the issues with this wedge? Who can tell me? What do we see here? It's a wedge, but it's also a trading range. And whenever you have a trading range, whenever you have a lot of bars to the left that are mostly overlapping, you can easily get strong bull bars and lead to a strong breakout. So it's deceiving. We have not touched the moving. Let's just look here. We did not touch the moving average on bar 31. So we're still always in long, and we can go a lot higher. A general rule of thumb I have is whenever you get a big gap up like this, I'm always assuming whenever you get a large gap on the open, I'm always assuming high probability of a second leg up. And sometimes you get this, where you even get a gap down in a bearish environment and you just kind of go sideways to down for most of the day. So my concern right here is the bears have not done enough to make this clearly. The bears have not done enough to make it a bear trend. It's strong enough that we've been in a trading range here, but this is a good time to go to the daily chart. So I would not be short here. I think there's probably sellers above, but at the moment I think we're going to go more sideways. Let's talk about the daily chart. I've mentioned several times that we're not in a bear trend, and at best we're in a trading range. And the problem I have right now, the bears, they're touching the moving average, and that's good for the bears. But I want to see closes below the moving average. I want to see bars completely below the moving average. Then I'll be convinced that the bears have a shot at getting something stronger. Right now, we keep touching the moving average and bouncing, touching the moving average, and then we had a big gap up. Euro dollar. You see what happened? We had negative gaps here and here, testing these lows back in December. This gap is closed finally. The bulls, they started collecting bull bars, and now they're getting closes above the moving average. The reason why we pulled back today is we tested this reversal bar here. It was reasonable to buy above this bar, especially if you could buy more lower on the second entry. I don't think a lot of bulls would buy here because it's consecutive bear bars strong enough for a second leg. But it's reasonable to buy above that bar or a pullback after you see 2 bars. So some traders will look at this bar and enter a pullback right here. This is converging into a trading range and increases the odds of sideways trading. We have a bar completely almost above the moving average. We have a close here, a close above the moving average here, a big bar with it's a tail now, but it's a big bar above the moving average. Those are signs of strength by the bulls. But remember, trends don't all of a sudden evolve into opposite trends. They converge into trading ranges. So always in long, better to be long than flat. But I have to say, what do we know? There's a 99% chance of something specific happening today. What is that 99%? Who can say it? Or type it in the chat. Probably a 99% chance of something happening. Yeah, touching the EMA. We'll probably get at least one close below the EMA and at least have tails, 2 or 3 bars with tails below the EMA. Without that, I don't think a lot of traders are going to be all that eager to be selling, right? To all that eager to be buying. Now, why? What's the argument with taking profits up here? Part of the issue I have with being long here is risk reward. If you're a bull, where do you put your stop? The problem right now is if you're long, you're probably long at what is the top of the trading range. And that's really not an ideal environment for most traders to be selling, for most traders to be buying. So I suspect we're probably going to get profit taking fairly soon and get a deep pullback. For the bulls, it's 2 legs up. We have a buy the close rally, 35, but top of the trading range. And then we have a doji on 36. And if we think back to the video course, what does Al say all the time about dojis and a buy the close rally? Whenever you get a doji in a breakout environment like 35, and 35 is not a great breakout. Whenever you get a doji like 36, it's a warning that we're probably going to pull back fairly soon, and we may not go that much higher. For the bulls, if I'm long, if 37 is a bear bar closing on its low, I would certainly get out below the bar. So you will have some bears front running shorts here. They'll start selling, taking a chance that we're probably going to pull back here. So at the moment, I think we are going to pull back. We're probably going to test the breakout point, the 32 high, 33 high, and go sideways to down. But it'd be better for the bears if we start getting bear bars closing on their lows. You can draw this. You can draw it like this. Doesn't matter. It's a bull channel. Channels evolve into trading ranges. And when I look at this, the bears are making money below bars all the way up. And that will increase the probability that we're going to test lower and get closer to the moving average. I went flat a couple of minutes ago. I do think we're going to pull back, but this is getting a little bit too strong. I do think we're in a trading range, but my concern here is we're just getting too many bull bars. And because of that, if I think about it like this, if I'm selling above a bar on a limit order, I'm trying to front run and catch a swing. I know most of the time I'm going to be disappointed. And that's the mentality of a limit order scalper. They're selling above bars and scalping. And most of the time, what you can do, what a lot of traders like to do, is wait for a stop entry. So for me, I'm really not a big fan of selling after this many bars up, even though it's 2 legs up, and I think we will pull back. I'd like to see more selling pressure. And the cost of that is I'm going to give up profit, potential profit, by getting out and looking to sell again lower. But that's okay. The way I look at trading is we have a trading range day. And if we're going to go all the way down to let's say the 5 low, and we start getting strong bear bars, there's going to be plenty of time for me to sell. So I'd rather take a small profit and wait to see what we get. Right now, well, I'm not interested in being flat. I do think the reality is a bear that's short and uses a wide stop. What's wide? Something like this, maybe a measured move up from here to here. I think the odds are we're going to go down here before we go all the way up here. But for most traders, I'd just rather wait and see more follow through selling. But that's what I was talking about with 36. 36, it's a doji. And because of that, the odds were we'd get a bar or 2 up and then start to pull back. You can see bears obviously beginning to sell and more bulls beginning to take partial profits. So am I upset that I got out, that I sold above the high of this bar and got out below this bar for, a point or 2? Not really. Trading, it's really important to be indifferent with what you're doing. And if you're indifferent and you focus on doing the right thing with the given information that you have, you'll be fine. You don't need a ton of points. You don't have to catch everything. What you have to do is take sensible trades. Let me go back to, here's NVIDIA, and you can see what happened. NVIDIA is actually really interesting. So if we go to, let me first talk about NVIDIA, then I'll talk about the Globex yesterday. We had a rally to the moving average, small pullback bull trend. And why would anybody be willing to buy in a small pullback trend when the market is just extremely overbought? Part of that reason is traders know that the first reversal down is probably going to fail. So what do? Traders are buying all the way up. And then we start getting big bear bars at the moving average, and they say, wow, we haven't touched the moving average all year. And the last time we touched the moving average was the 8th of January. What a wonderful place to buy. So they start buying aggressively at the market on the way down, and that's what leads to the gap up. Let me do it on this chart. Globex session. I think we're always in short here, by the way. So I'd rather be short. I'd be out of longs at this point. I want to wait and see how this bar closes. Here it is. This was the release of the, let me get rid of this line. If you watch the release of NVIDIA, the earnings, this bar is actually a really fascinating bar right here. And the reason I say that is if you watched it, it went up and down like crazy. And there we go. So it's hard to see it. But this bar, if I remember correctly, it went up here and then sold off back all the way down here, then went back up here, then sold off around the close. So these bars are really dangerous bars. And you can lose a lot of money if you're not careful. Most of the time, whenever you have a report or something like earnings, I like to wait for a couple of bars. But what happens, what's great about this is whenever you get a strong bull bar like this and you start getting follow-through buying like this, what do you think the odds are? You think we're going to get a bear trend before we get a trading range or channel to the upside? Of course not. We're going to go sideways to up. So what a lot of traders do, they just start buying small pullbacks and they use a wide stop and they say, hey, this is a strong enough rally. I don't know if we're going to get a measured move up at the bars. But if I go to a 15-minute chart, and I'll do this pretty regularly, if I get here's a 15-minute chart, we'll probably go at least 50% of the way up and go sideways, and we maybe 60% chance we get up here. So sometimes I'll buy in the Globex session a small position and use a wide stop and just hold for a couple of hours and see what we get. You get a couple of bars up, and then you say, wow, I made 10 points. I can take my profit. Whether it's 10 points, 15 points, it doesn't matter. Whenever you get a strong rally, the most important thing is do not sell. Now, who can tell me? Does anyone know why? Or does anyone have a guess as to why the market rallied late yesterday? Does anyone have an idea why this happened? So here's yesterday's high. And in the final minutes of the day, we broke above yesterday, and we closed about a few ticks above yesterday's highs. Anybody have any ideas why? And think about the higher time frame. That's the hint. So here is the low of the day, around 49.60. Here is the daily chart. 49.60 takes us somewhere down here in this area. Whenever you have a touch of a moving average, usually the market doesn't touch it and then reverse up. What often happens is the market's got to probe several points below it before it reverses up. And because of that, we went several points below and we reversed up. So the rally on the open, or the rally at the end of the day yesterday, was more due to For one, we had a bear channel and it was getting weak, a lot of overlapping bars. And second, higher time frames. The market reversed up strongly, going outside up on the day. Most importantly, if you're ever short and you see a bar like 72, 73, do not stay short. And if you can, buy a small position. One of the ways to get over fears of, let's see, we're not missing anything, high 1 buy 39, probably sellers above and more sideways. One of the ways to get over fears of entering breakouts, big bars like this, is to trade really, really small. And I think everybody should start out trading the SPY. It's a great option or method to begin trading because you can truly trade an I don't care size. Even if 1 micro seems small to a lot of people, the reality is there's psychological barriers. And if you can learn to trade even, let's say you have a breakout here, 72, 73, and you think, wow, that's from 75 all the way down to 62, that's 13 points. It's over $100. It's over, $50, $60 in the E-mini. A lot of people have it's common for people to have a psychological fear and they won't enter because they still care about the $60. What's great about the SPY is you can just buy 5 shares at the market and your stop's about $1 away, maybe $1.20, $1.30 away. And if you're long 5 shares, worst case, you lose $6 or $7 on the trade. And you'll remove any carrying you have with the trade. And the other benefit is you can learn to buy. You can learn to buy more. You can learn to buy even more. And you can learn to add to positions by trading really, really small. Probably sellers above 39 and at least a small second leg down closer to the moving average. This is really not ideal for the bears. For the bulls, bears keep making money above bars. And that will limit the probability. There we go. That will limit the probability that we continue to go a lot higher. But remember what I'm going to say. What's the one thing, let me just ask you, what's the one thing we need if we're going to get a reversal? Who can tell me? So again, I'd rather like to see a test of the moving average. So I'm still assuming tight bull channel. Possible negative gaps right here. The close of 25, close of 39, so we may still go a little bit higher. Well, there you go. So again, my concern is this. We're closing gaps. However, close. I see an open gap. And the other problem I have is this is a really big gap up. And one of the things, it's really common. It's really common for traders to, they see, let me back up. It's common for traders to understand that eventually traders start trying to trade breakouts, but then they keep trading all the bad breakouts. And what eventually ends up happening is traders start to learn that if they fade things back to the mean, like the moving average, then most of the time they do pretty well. But whenever you get a big gap up like this, it's usually a mistake to assume that we're going to immediately pull back and reverse. So my concern here is big gap up, and if we get an open gap here, we could break out to the upside. I do think we're in a bull channel, and the odds are we're going to go sideways to down. But the problem I have right now is the bulls are still too strong for me to hold short. That's why I'd rather wait and see a strong, credible reason to sell before I just start selling with limit orders and scaling in. I mentioned that we had a trading range here, and this could be a breakout pullback, and this could lead to a stronger upside breakout. So that's my concern. This green line is a negative gap, and that could lead to an upside breakout. So if we get a gap here, another gap here, and we start to rally, we could be in a small pullback trend. Well, That's more concern for me if I'm a bear. Open gap here, bull breakout. So that's what I was talking about. We have a trading range. You can easily look at this and say, yeah, it's a bear. We're in a broad bull channel. Channels evolve into trading ranges, therefore we should go sideways. 75% chance this channel fails. That's not true. Because it's a broad trading range, there's a greater risk of an upside breakout. I still think we're going to touch the moving average. And because of that, I'm a little bit hesitant to buy up here. But there's no way right now. Well, I do think if you sell here, we'll probably pull back and test the breakout point. I'm really not a big fan of doing that. We're getting open gaps, and open gaps mean trap traders, and trap traders mean we're probably going to get a second leg up. So again, whenever I think that the market is in a fairly strong trend, I immediately stop counter trend trading with limit orders. And the only way I'll look to sell is if I start getting strong sell signal bars. So 43, 42, let me back up with that. And the reason I say strong sell signal bars is it's always in long. And if it's always in long, bulls, they buy above 31. There's no reason to get out here. Some might get out below 38, but then they have to buy again somewhere in here. And because of 41 and 42, it's a strong enough rally that the first reversal down will probably fail. And because of that, I think the bears need a fairly strong bear bar to convince a lot of traders that we're going to go lower. And that means we're probably going to go sideways, worst case, for the bulls. So if I had to do anything, I guess I'd be long. I think it's probably better to be long. You're far from the moving average, so we'll probably pull back soon. But chances are 40, 41, and 42 are strong enough for a second leg up. You see what's going on here with 43? Let me turn on the second counter. The bulls are taking a long time to get follow through. And because of that, you have more and more bulls selling. For the bulls, possible wedge, 32, 37, and then 42. 3 pushes up. But my concern is we may get a small second leg up. It's possible that 42 and 41 are exhaustion, but at the moment, I think there's probably buyers not far below. And we're probably going to go more sideways than straight down. What do you do if 43 is a big bear bar closing on its low? You'll have some traders exit. So what happened here? You had some bulls buying the close of 42, buying more below 42, and now they're deciding what to do. And you will have some bulls looking to exit around the 42 close. It's also a test of the 37 high. If you sold the close of 37, how are you feeling? You sold the close of 37, your entry price is 83.75, and the low of 43 is 84.25. So we came within 2 ticks of the high of 37, and now we're reversing up. That's a problem for the bears. So we have 1 gap here, and now we have possible 2 gaps right here. I think we will close this gap. I'm going to keep this line here, this green line, more or less as a subtle reminder that we have potentially 2 open gaps. While I think they will close, if we continue to drift sideways to up, then we could rally in a small pullback trend. We're far from the moving average. Therefore, we may have to go more sideways here until we get closer to the moving average. So let's see what happens at the high close. Let me take a look at a 15-minute chart. 15-minute chart. Here's the outside up bar, the report bar. that happened 30 minutes after the close or 15 minutes after the close yesterday, and we've been in a small pullback bull trend ever since. So now, starting to go outside up. I was long. I bought the close and I bought more below 42, and I just took half off at my original entry. And I'll wait and see how this bar closes. So disappointing, but probably going to go at least a little bit higher. But if this was if this is going to be, I suspect we're probably going to go more sideways to up here. Bad follow through 43, probably buyers below, but disappointed bulls may not be interested in buying above 43. But we still have yet to have a strong sell signal bar, and that will prevent bears from being interested in selling here. You can see not a lot of traders interested in buying up here. And that's in part why we're going sideways. But you also have bears deciding what to do. So I'm going to, again, this green line is not 100% accurate. It's more or less a reminder that there's an open gap. Sometimes on charts, I like to draw green boxes that are a little bit transparent, but they're noticeable enough, but you can still focus in on the chart. And I like to draw them as just a visual reminder that we have open gaps. And open gaps are signs of small pullback trends. They're breakouts on higher time frames. Let's go to a 30-minute chart. Here's a 30-minute chart. Strong rally. 60-minute chart. Strong rally, but getting climactic. And because of that, I think the odds are we're going to have to go sideways for a number of bars here. I just went flat. The rally was taking longer than I want. And because of that, if I think the market's going to go mostly sideways, I'd rather be flat and wait for something else. Here's crude oil. We had a rally. Let me go to a 240-minute chart. We had a rally over the past yesterday, and today we had a deep pullback over the past 2 days. Yesterday we had a deep pullback, testing the breakout point here and a strong second leg up. And you can look at this rally channel. We sold off, and you can look at these three big bear bars and say, "Wow, that's the start of a strong bear trend. I better look to sell." That's not really true. 3 bear bars down and then a really climactic bar. You never know if this is just a sell vacuum test of support, 50% pullback of the rally, or if this is the start of a strong bear trend. And whenever you see this and then you get a strong reversal up, it's usually better to exit. 15-minute chart, you can see it a little bit better. We had a bear breakout, consecutive bear bars. We started channeling. We got a surprise bear breakout here and then a strong reversal. So in this bar, it's always in long. Do you see what happened? Does anyone see why we reversed up here? We had a bear breakout here. Now, if this is the start of a strong bear breakout that's going to lead to a bear trend, what do you think the follow-through should look like? Ideally, the follow-through would be another big bear bar. Instead, it was a doji. And because it was a doji, we reversed up and everybody started to buy. Good for the bears. The bears, they're getting back down to the breakout point. So like I said, I really want to see gaps begin to close. And if gaps start closing, that will increase the probability we're going to go sideways. Remember what I said on the 60-minute chart? You can see it over here. Big bear bar. And it's climactic. It's the best looking bear bar we've had in this entire rally since here, late yesterday afternoon. And this, I said bear bar, I meant bull bar. It's the best looking bull bar we've had. So it's probably more exhaustion. Exhaustion often leads to sideways trading for a couple of bars and can often get trend resumption. I don't think we're going to get a strong bear trend, but I do expect we may test the midpoint of the prior 60 minutes. I want to see gaps close. So it's good for the bears. They're selling above bars, making money. I'm happy about that. But if I'm a bear, I want to see a strong sign of strength. I want to see this green box get taken out. And I want to see the market close far below it. So I don't want 45 to just test down to the close of 37 and then reverse up. I want to see 45 close below 37. I want to see 45 be a bear bar closing on its low. I want to see 46 be another bear bar closing far below it, testing the high of 39. I need to see more signs of bearish selling pressure. Remember what I said a few minutes ago? I mentioned that traders want to see, what did I say about this? Who can tell me? So I said something specifically regarding this box in the prior bar. Body gap, but what did I say about 45? 45, I wanted to see 45 close completely below the green box. It needed to close below the 37 right here. And then next I said it'd be better if 45 closes below it and 46 closes even further below it. So the small pullback trend is still in play. And that is the concern. Big bar, big risk, so there might be more sellers above than buyers. Big down, big up, big confusion, and probably going to go sideways here. Bull bar closing on its high, still always in long. We're collecting bear bars, but we're still in a bull channel, and we still have open gaps. I suspect we're going to go sideways fairly soon, but again, it's really tricky selling with limit orders. The one thing I think going into today is, we're into the close, is this. Daily chart, we have a big bull bar, and right now it is bar 48. So we still have 3 hours left in the day, and I think it's going to be pretty tough for the market for this bar to close on its high. The bulls, what that means is the bulls have to keep the market up at this price level for another 30, 35 bars. And in order to do that, that's going to be pretty tough for the bulls. And because of that, I suspect we're going to start to go sideways, develop more selling pressure, and we'll probably get a tail on this bar. But you can see the issue. It's really hard to sell when you get open gaps. It's a really good way to get burned really bad. The traders selling, they're selling many points above bars. And I think it's better. I think a good rule of thumb for most traders is when you see open gaps, it's better to wait. Wait for the market to clearly get a reversal down. It's easy to look at moves and think, yeah, this is definitely going to fail. It's a tight bull channel, but it's not all that strong. But whenever you get open gaps, it's better to wait. Good breakout for the bulls. Increases the odds that we're going to go at least a little bit higher. So what's the one thing you probably shouldn't do here? Sell. It's easy to look at this and think, yeah, this bull trend's gone on since bar 2. There's no way it can go higher. Let's just see if we're at a measured move from here. So here's a low close of 2. Close of 2 up to here. We're already at the measured move target of that. Measured move target based on the range of bar 2 low to the bar 4 high. And we're getting close to that, so we'll probably get up there. Anyways, back to what I was saying. Most traders are better off. Most traders are better off waiting for the market to get stronger. And it's really easy. You can look at this and you say, yeah, the market, we're getting bear bars, therefore it's probably going to go more sideways, and eventually it'll go sideways to down. Therefore, I'm not gonna buy. I'm gonna sell. But for the most part, it's better if traders wait for more selling pressure. There's a saying on Wall Street, I'm pretty sure it's Warren Buffett, but the market can stay irrational longer than you can stay solvent. And obviously there's more logic to that than just that saying. But you get the point. The market can continue to do what it's been doing for a long time, and betting against it is a really good way to blow an account or take on a lot of damage. Your goal as a trader is to follow the market and respond based on what it's doing. So when I see bars, like whenever I see open gaps here, I see a trading range, and then I see open gaps, I see bars above the moving average. Worst case, I fold my arms and I say, I want to sell, but I can't allow myself to sell with open gaps and everything being above the moving average. Therefore, I'm trapped on the sidelines. The other problem with selling and using wide stops and limit orders, it's really hard to make the math work, especially in this environment. Because if you sell, let's say you sell the high right here. This is a classic mistake that traders make, and I've made it thousands of times. You sell right here at the market, and you scale in higher up here, and you don't get out here, and then you get this rally, and you say, darn, I should have gotten out. I was holding for a swing. I should have scalped. And instead, what happens is traders get trapped into a losing trade, and they scale in, so they're short. They scale in once, maybe they scale in twice, and then they get trapped with this big rally, and they just continuously move their stop. And the reason they move their stop is the risk is big, but then they also start convincing themselves, oh, well, I know I said I was going to have a stop at 5088. I'm going to move it up because this is probably a blow off top or a climactic rally, and we're probably going to test all the way back down here. So it doesn't make sense to be selling or buying back my shorts high in what's probably a trading range. Well, this is not a trading range. This is a bull trend. And bull trends can last for a lot of bars. Do I think we're going to get back down here? Yeah, of course I do. I think we are going to test back down to that area. Am I willing to sell for a swing, betting that will happen? I'm a little bit resistant to it. It's the same thing I said about being over here. I did take a chance. I did sell taking a chance. It wasn't over here. It was down here. I sold taking a chance that 37 would be a big bear bar closing on its low, and then maybe we tested the moving average. But we never got that test of the moving average. And when 37 was a bull bar, I said, you know what? This is getting strong. It could be a small pullback trend or the early stage of a small pullback trend. Maybe I should be flat and waiting. Measure move target from the low of 19 to the close of one of these bars takes you up here. So we have a cluster of targets above. Let me lock. One thing I do at TradeStation, often lock measured move targets because I have a habit of clicking on the chart and moving it. So the projection is 3 1/4. And you can see the high of this bar, 3 1/4. So we touched the measured move from the low of 1 to the high of bar 4 to the tick. Do I think we're going to pull back? Yes. But I also thought we would pull back on this bar. Again, the number one thing I want to see, strong trend line breaks. And we're not getting that. We're getting a tight bull channel here now. So we had a bull channel, and then it got stronger. Cocoa, really strong rally. Here's the monthly chart, and this is the futures chart. And you can see very climactic breakout. I'm pretty sure there's a shortage going on around the world, and that's in part, that's a big reason of why this is happening, but pretty fascinating. This chart went up from back over here. So this time last year, basically February, the closing price was 2,500. And you can see we're basically at 6,000. And that's 12 bars later, or a year later. So obviously very, very strong. While we probably will pull back fairly soon, I think it's really dangerous to just start shorting markets when they're doing this. And the reason is, for one, whenever you're shorting, especially if you're shorting something outright, your own margin, and if you sold anywhere in here, assuming your broker would let you, I'm sure they would, but if you sold anywhere in here, this looks climactic, buy climax here, outside up, we should get the second leg, we should get a pullback at least 50%, maybe all the way down, and then look what happened. So instead of the market going down on the open of this month, we went straight up. The open of this bar is 4,562, and the low of the bar is 4,558. So we only went 3 points below. Let's look at a daily chart and see where that is. So you can see it's right here. This was the close of January, the 31st. Here was the open of the following month. We gapped up on the open, and then we went straight up. So the bulls quickly got more trapped into a losing position. So what do I need to do to sell here? I need more selling pressure at a minimum. I still think there's a 99% chance we're going to get down to the moving average. And you can see the moving average is getting dragged up rather quickly. But right now, always in long, better to be long than short. And certainly okay to be flat. So important lesson to learn today, open gaps equal trending behavior. Continuing to climb higher. Again, body's getting smaller, but these are just really, really good ways to have a very bad day. It's so common. Traders, they look at this and they say, yeah, the market's overdone. I'm going to start selling. And you can draw all of the measured move targets you want. But the one thing that's worth writing down and memorizing is wedge tops in a bull trend are much lower probability than wedge bottoms in a bull trend. What's a wedge bottom in a bull trend? Who can tell me? In a bull trend, when you get a wedge bottom, what does that mean? A wedge bottom in a bull trend will always mean something. Pullbacks. Pullbacks, exactly. A pullback is always higher probability than betting on a reversal in a bull trend. And it's the opposite for bears in a bear trend. Wedge tops are always much higher probability in a bear trend than a wedge bottom. The market's always trying to form tops and wedge tops and bull trends, wedge bottoms and bear trends. And traders, you have to pay attention. There's a few things. Let's just go to a blank chart. So here's our blank chart for today. And you can see we had this outside up bar, right at the moving average, tight trading range, breakout mode. 50-50 chance the breakout will be successful, 50-50 chance it will fail. And needless to say, we got the rally to the upside. By the way, yesterday, I was unable to complete the end of day review on YouTube. I'm going to, if I end up, I will record a video tonight for the end of day review and post it on YouTube for yesterday. I'll either record it, it'll either be recorded and posted, or I'll probably just live stream it. It'll be tonight though, and it'll be pretty late, so maybe 10 o'clock Eastern time tonight, 5 o'clock, 9 o'clock Central time. Today's end of day review will be at normal time, so when the market closes, I'll discuss the end of day review today. But for those of you that want to listen to an end of day review for yesterday, check back later tonight or in the morning on the Brooks Trading Course YouTube channel, and I'll have something posted. We're getting a doji on 52, so a sign of weakening bulls. That's good for the bears, but why haven't the bears been able to get one bar? Look at the past, however many bars this is, bar 40 to bar 52. So let's say 12 bars, 13 bars if you include 39. Why have we only had 2 consecutive bear bars with only one closing below its midpoint in the past 12 bars? That's a sign of a fairly strong trend. Is it okay to take profits here? I think it's probably okay. Measure move target from the low of 19 to the high of this bar takes you up here. I'm going to get rid of that measure move target. Measure move from the low, the start of the triangle breakout, the 31 low to this high, or this close. That looks pretty accurate. So why did I draw this target here? Wrong button. Let me do this. I drew that target because we had a tight trading range here, an outside up bar. We tested the moving average here, and I'd get out of shorts. I'd get out of longs up here, by the way. I still think, again, 99% chance we're going to get to the moving average. Bulls, if they bought above this bar, we rallied for 2 legs. We tried to form a wedge where this red line is, and we bred a strong breakout, 41.42. It was strong enough for a second leg. And let's see if we lock this in place. Measured move target is 475, and the high right here is 5 even. So the market went 1 tick above this measured move from the low of 31 to this close. And I could also use, so the ways to draw it, I could use this close right here, which takes you to 575. Doesn't really matter. We're close to the measured move target is the point. I think the odds are high we're going to get down to the moving average. And the reason for that is because that's what happens most of the time. Daily chart, I mentioned that the bulls still have 2 hours left in the day, which means they got to make this bar close on its high over the next 2 hours. And I think they're going to run out of energy. So overall, sideways to down is probably most likely. High one buy, there might be, I suspect, small pullback trend, but there might be more sellers above 53 than buyers, and we may have to go sideways here. But still in a small pullback trend, and better to be in probably too early to be selling. 55 getting to be a little bit climactic, and that will bring some profit taking. Measured move from the low of 19 to the high of 37 takes you up here. I think it's reasonable. You can go flat on this bar. You can take partial profits. Climactic bar, we're probably going to pull back for a bar or two. But it might be more or less like this bar right here. There's 12 o'clock. Here's 12 o'clock. You see, I mentioned this was climactic on the 60-minute chart, and we went sideways for 4, 5, 6 bars, and then you got trend resumption. We may go sideways here for 3 or 4 bars and then get a second leg up. But I think I would be flat. We can easily test down to the 55 low. Now, what if you buy the close at 55? I think you need a pretty wide stop. But the reality is, if you buy the close at 55 and you buy more below 55 and you buy more below 53, you're probably going to make money because we're in a small pullback trend. And small pullback trends typically evolve into trading ranges. A lot of traders like to wait for climactic behavior before they start selling. And while I think 55 is climactic enough, we're probably going to go sideways. It's not enough. I don't know if the risk reward is, I don't know if the probability is high enough to sell the close 55 and put a stop, a measured move up. What about selling the high at 55 and putting a stop, a measured move up? What I mean is this. So here's the low of the bar. That didn't work. There's the low of the bar. There's the high of the bar. You sell the high of this bar, put a stop up here. And if 56 is a bull bar closing on its high, you take the loss and move on. Some traders will do that. But at the moment, probably going to go sideways here. The one thing I do believe, there's two things I believe about today. One, we're going to touch the moving average, and we're going to get a close below the moving average. I think that's high probability. The second is I don't think this bar is going to close on its high. It might close on its high. But in order for this bar, the daily chart, to close on its high, I think what's going to have to happen is we go sideways, we get a weak sell-off lasting maybe an hour to an hour and a half, and then somewhere around 2:30 Central Time, bar 72, we get a strong rally into the close, closing the market on its high. If we drift up like this for the rest of the day, I think the bulls are just going to become more and more exhausted. Bear bar 56, but a fairly weak bar. Is that enough for bulls to exit below? I don't know. I think there's sellers above 56, and I think there will be disappointed bulls who bought the close at 55, disappointed by 56, and they'll look to get out break even at the high close 55. But I believe we're probably going to get a minor reversal down. And that increases the odds that whatever we get will be limited, and that the bulls buying and scaling in lower are probably going to make money. Bulls getting a second leg up after 55. Whenever you get a buy climax or exhaustion, it's common to get a second leg up after it. Again, the problem the bears have here is we're in a small pullback bull trend, and that will limit the amount of traders that'll be willing to sell here. I'm one of those traders. I'm just not willing to sell. And the reason is the channel's too tight. For me, I want to see strong bear bars closing on their lows. And then ideally, what I really want to see if I'm looking to sell, I want bars like this, but completely below the moving average, and then a retest. Until then, I'm just going to assume that we're going to drift sideways to up. Another target for bulls, measure move from the low of 31 to the high of this bar, projecting up. Second leg up after 55, bar 57 is the second leg up. Probably going to get bad follow through on the bar. Still no sign of the top, so better to wait for the bulls to be disappointed. Otherwise, bulls will continue to stay long, holding, taking a chance that the market continues to rally. Parabolic wedge, 55, 57, and then the current bar, 59. May get a couple of legs sideways to down. but still not clearly. It's still always in long, and better to be flat and waiting for more information. I got distracted for a second, and here you go. Another big bull bar with 59. This is why it's so dangerous. You look at bars like 55 and you think, yeah, climactic bar, probably going to go sideways. And then you look at 57 and you say, okay, 57 was expected. 55 was climactic. They usually get second legs. And now you're getting even another biclimax bar. This one, a little bit different. You're at the measured move target that we have drawn. The low of 31 to the high of this bar, projecting up here. But again, still not all that easy to be selling this. Most traders are better off waiting for more information. I do think we're probably going to pull back here within a bar or two. Would I buy the close of bar 59? I would not. I think there's too much risk. We're going to pull back here. Not a lot of eager bears interested in selling down here. And you can see we're not racing. The reason for that is there's not a lot of profit taking by the bulls. I do think we're going to pull back fairly soon, but I think it's fairly dangerous to be buying in these environments. The market can go a lot higher than what seems reasonable. Plus, selling, it's really difficult to make the math work. In situations like this, if I'm ever selling a bar like 59, and then we get follow through on 60, I'm certainly going to exit back at my original entry. There's just too much risk. And the channel up is just far too strong. I am unwilling to be long up here. We're so far from the moving average that I think we're going to have to start going sideways to down. This is enough selling that I believe it'll entice, I believe it'll entice more traders to take profits. And you can see that's why we're pulling back here. You have a lot of momentum bulls giving up and bears looking to sell. Strong enough bar, 61, will probably get a second leg down. I'm not confident we're just going to go straight down to the moving average, though. Well, I should have stayed short on the close of 60, but that's okay. Parabolic wedge with 57. Let me just draw it with bar 55, 57, and then right here. Strong enough reversal down. Are we always in short? It really depends on your definition of always in short in this environment. We're always in short in the sense that we're probably going to get to the moving average and get a second leg down. But we're not always in short in the fact that you can probably hold short for the rest of the day. So remember what I said about the daily chart? What did I mention? Who can tell me? What did I mention about the daily chart? What are traders going to pay attention to on the daily chart today? I mentioned about the daily chart. What are traders going to pay attention to on the daily chart today? Who wants to take a guess? The wick, exactly. Good job, D. And because of that, traders are going to pay attention to the wick of the bar. 1 second. And in order for this bar to close on its high, it's more likely than not, it's not going to continue to rally. So what I mean by that is the odds are really, really small that we're going to continue to have this price action for another, from bar 60, basically 20 bars, 21 bars. The odds are against that. So what the bulls really need is maybe an hour of sideways to down trading. This bar is big enough, I think it'll get a second leg down. But I believe the bears that are selling here, it's not going to be an easy trade. They sell, they scale in, they get a second leg down. I don't think we're going all the way down here. We might. Obviously, I'll change my opinion if 62 is a very big bear bar down here. But right now, when I look at this bar, I think, okay, 61, strong enough surprise. We'll probably get a second leg down. And if we can go sideways, and if the bulls can prevent the bears from becoming too strong, and we go sideways to down, form some kind of a wedge bottom at the moving average, and we don't get too far away from these highs, we don't go all the way down here, for example. If we stay in this area, start to go sideways for an hour, maybe in the final 30 minutes of the session, we can rally and get up to the high close. Now, in case I'm not clear, I would certainly be out of longs here. Now, what do you notice about 62? 61, big bear bar closing on its low, but nobody wants to sell the close of 61. And the reason is everybody knows we're in a trading range. And if we're in a trading range, chances are the downside is going to be limited. So probably going to go sideways here. I do think we'll get a second leg down and get closer to the moving average. Okay, I'll be back in just a few minutes. Not a lot of bears wanting to sell down here. We're near the moving average, and the chances are we're going to evolve into a trading range more likely than the start of an opposite trend. The market has been away from the moving average for a lot of bars, and that increases the probability that once we get to the moving average, the chances are we're going to start to go sideways. So probably buyers in this general area and more sideways to up. What does sideways to up mean? We're probably going to test the 60 low at some point soon. Bulls buy the 60 low, 61 strong, they wait for a second leg down, and they buy, betting on a trading range. Getting closer to the moving average. Probably going to start to go sideways fairly soon. Sellers above 63. It's a bad looking stop entry, so it increases the odds of sellers above, and at least a little bit lower to the moving average. At the moving average, good for the bulls, good for the bears, but I really want to see strong closes below the moving average. So at a minimum, the bears the bears need to get closes below the moving average. Ideally, one strong close below the moving average, a body completely below the moving average. Without that, chances are whatever sell-off we get here will be limited and will probably go sideways. We're getting a second leg down from bar 61. 61, strong enough bar, strong enough surprise, probably a second leg down likely. This is that second leg. But who wants to sell at the moving average the first time we've touched it all day? More likely, bears are going to take profits down here and bulls are going to start buying. Bears getting the bear breakout, 66, at the moving average. Good for the bears, but are we always in short? I think the bears, it's a little bit of a surprise. Makes me think we might go a little bit lower, but it's still a wedge. 61, 63, and then this bar 66. The bigger this bar, the increased risk that we're going to get a second leg down. So at the moment, I think this is strong enough, we'll get a second leg down. But it'd be better to wait and see follow through. This is more likely to end up becoming a trading range more than the start of a strong opposite trend. And that is why I'm hesitant at this moment to sell. Too much risk, we're probably going to go sideways. With that tail being as big as it is on 66, I am not willing to sell the close down here. We're probably in a trading range, and we have 3 pushes down, 61, 63, and then 66. You can also call it 4 pushes down, 61, 63, 65, and 66. But we're right at support, the moving average, and the chances are we're going to go sideways in here rather than straight down. Tight bear channel, first reversal up may fail, but I think realistically we'll probably test the midpoint for sure of this sell-off. Now it's possible, obviously the bears want to get consecutive bear bars below the moving average. If they start getting 2 or 3 consecutive bear bars below the moving average, then we'll do the opposite. So it's possible we get back down here. But at the moment, I think the bears need to do more to convince traders that they're in control. Someone made a comment, I just saw about 65, 20 gap bar buy signal, and they were commenting how it didn't work. This is a bad stop entry buy. And the reason it's a bad stop entry buy, it's a micro channel since 60, and this bar right here, it's a very small bar. And because of that, it's a small body. It increases the odds that the market goes more sideways than straight down. But this is a warning. It looks like a leg in a trading range. And because of that, if we do go a little bit lower, we're probably going to test back to this area. So a lot of traders that are buying above this bar, let me see if it triggered. If they're buying above a bar like 65, their entry price is 98.75. A lot of those bulls buying above are using wide stops and buying more lower. What do you think they're going to do on a retest? They'll probably take part off. I do that pretty regularly. I'm not keen on buying right here, but what I will do is start buying near the moving average or below it and scaling lower, betting that this will evolve into a trading range. Trading ranges are always forcing traders to buy above bad stop entries like 65. And some traders will just buy all the way down. Now, why would a trader buy all the way down? It's the same reason as traders buying up here. Why would some bulls buy the close of 60? The reason is they know that a trading range is more likely than a bear trend. So if I'm a bull and I buy up here and I buy more at the moving average, what do you think is going to happen? Well, the odds are we're in a trading range. And if I'm buying high, if I buy in what I think is a bull trend and the market evolves into a trading range, in this area, chances are we'll get back to this price level. NVIDIA is a good example of that. So NVIDIA, parabolic behavior, we tested the moving average, and then we still went higher. Daily chart of the E-mini, it was parabolic down here, or in this price level. We tested down in the moving average, spent a little bit of time here, a couple of days, rallied near the highs, pulled back again, and then went to a new high. I don't know if we're going to do that today on the 5-minute chart, but I do believe we're in a trading range. And the traders who bought the low of bar 60, guess what? They're probably going to make money. So there's a 60% chance we're going to get back to the low of 60. There's probably a 60% chance we're going to get back to the close of bar 60. But there's an 80% chance, if you buy the low of 60, you buy more above a bull bar here, 80% chance you can get out break even, which is right here around 51.02. 80% chance you buy the close at 60, you wait and buy more above a strong bull bar like here. 80% chance you're probably going to get out break even, which would be around 51.03. So at a minimum, I think we're going to this price level, 51.03. I want to make it exact. For some reason, the scaling is messed up on this computer. Not the scaling, the font. So that red line in the middle is the average entry price for the bulls who bought the close of 60 and bought more above 67. The average entry is 51.03. You could also do that by just adding up the close of 60 and then one tick above 67 and dividing it by 2. A lot of traders, they'll buy small on 60, like one contract, and then they'll double their position. They'll buy 2 contracts here above a bull bar like 67, which will lower their average entry even further. Low one short, but probably more buyers below than sellers. The bears, they really need to do more down here. Does anyone remember? I've talked about low ones and high ones pretty regularly. Does anyone know why low ones often have about more buyers below and high ones, why they often have more sellers above? Disappointed traders, yeah, that's true. Limit order traders, first pullback of the move, break even traders getting out, trap traders. Yeah, so far everyone's right. Whenever you get a low one is in simple terms, a low one is a pullback. It's a retest of an extreme. So on a smaller time frame, bar 67 is actually bar 67 on a smaller time frame is a low one. Now, how can that be a low one? Because the market sold off on 66 and rallied, sold off again on 67, forming a higher low. It tried again on 69. That's a higher low. Technically speaking, low ones have to trigger. So a low one is not a low one until the entry bar, the following bar, which in this case is 69, triggers the low one. Until then, it's not a low one. But the point is, most of the time, you have disappointed traders and the market goes higher. The difference is when you have a high one, like right here. We had 2 strong high ones, the first one was bar 2, which was arguably, bar 2 was not clearly a strong high one. It was a high one after a big gap up, so that was good for the bulls, but it's following a big bear bar, and that was bad for the bulls. There should have been sellers above 2. Then we got follow through on 3, because the bears were expecting a brief second leg down in trend resumption. When they got follow through on 3, a lot of those bears gave up and bulls started buying. Same thing with 55. 53. High one buy 53. So we have a doji, and then we got follow through buying 54, and then we broke to the upside. Again, I think the target is 103, somewhere between 102 and 103. Sometimes what I'll do is I'll take the later entry and scalp out at the average entry price. Instead of buying the close at 60 and buying more above a bull bar, what I like to do is wait for the market to sell off to the moving average, and then I find a way to get long, and then I think to myself, okay, what would those bulls do if you were really disappointed on the trade? It's reasonable to buy up here, buy more lower, and get out break even. And because of that, I'm going to set a limit order, a target to take profits, maybe a point or two below the average entry price. So buy somewhere down here and scalp out around the midpoint. Traders will do that pretty regularly. You can see disappointed bulls bought above 67 here, disappointed 68, getting out break even in this area. So I think we're probably going to get a second leg up and test closer to the 5102, 5103 price level. The bears, they're not successfully getting a breakout below the moving average, and that's because the moving average is more likely going to act as support. Sometimes if we start getting consecutive bull bars, I'll take half the position off around the 102 to 101 area. Basically somewhere in this area near the midpoint, the average entry price, bulls that buy here, buy more. So sometimes I'll take half off here and swing the balance, taking a chance that we rally back up to the low of 60 or the close. For those that are long, I think it's reasonable to take half off somewhere where this middle line is. I'm going to make it blue. So that is the target, the average entry for the bulls. Good bar for the bulls. Increase the probability that we're going to go at least a little bit higher. Are we always in long? I don't think we ever went always in short. And I think a lot of the bears that were short, I think they would have to get out. They probably get out of the longs above 69, certainly above 70. Too much risk if the market's going to get the second leg up. I just took half off, and I'll hold the rest of the balance, taking a chance that we get closer to the 60 low and the 61 close. Bulls trying to get up to the average entry price, which is this blue line right here. And you can see they're having a hard time getting up there. So some disappointed bulls right here. Average entry price 3 even, high of this bar 275. So a lot of traders taking partial profits within a tick from the midpoint, the close of bar 60, the average entry price from the close of 60 to above bar 67. Probably still going to go at least a little bit higher. Not a lot of time left in the day though. And because of that, I suspect we're going to go more sideways for most of the day. We're at bar 72, so we're getting within within the final 30 minutes of the session. And a lot of traders, typically, if bar 72 is not moving quite a bit, in other words, by bar 72, if you're in a relatively tight trading range, it's usually better to wait for tomorrow. The bears, they want a second leg down. They see a low 2, 72, and then the low one, 68. Some bears sell below 68, sell more higher. But I don't know, with the market being in a bull trend, I think there's too much risk we get a second leg up. But we may have to get down to the 68 low. So let's see what 73 looks like. Some traders, they sell below 73 here, scaling higher, get out break even. Not what you want to see if you're a bull. More traders giving up below 72. Increase the odds, we may go a little bit lower. But once again, the bears need to break strongly below the moving average. Otherwise, chances are we're going to go more sideways here. 73, not good for the bears. More traders took profits on the close, near the close of 73, which is why 73 pulled back. Probably going to get a second leg up. Remember what I said. If the bulls are lucky, if they can find buying pressure into the close, then they may be able to close this day on a tie. The bulls want to create as small of a tail as possible. and we're close enough to the end of the day that we might be able to get a rally into the close and close somewhere up here. Most likely, I think we're going to go sideways. You can see the market came really close to it got back to the low of 60, but not quite the close of bar 60. But no surprise here. This is what happens in trends. As scary as it is to buy up here, all the bulls that bought and scaled in, they're sufficiently disappointed, and the market allowed them out. What about selling below 75? Well, my only problem with selling below 75 is we're so late in the day that I just really don't think it's worth it. Selling below 75, the risk reward's big, and typically when you're in the middle of a tight trading range that we've had really since bar 57, when you're in the middle of a tight trading range and the market and it's late in the day, like bar 75, really anything past bar 72, usually the market's going to continue sideways into the close. I'll start the review here in about 10 minutes, and I'll take a look at some of the questions that have been asked as well. You can see bad signal bar 75. A lot of traders who sold below 75 were sufficiently disappointed with 76, and that's why in part the market bounced there. Not a lot of traders were disappointed with the entry bar 75 that they started buying back shorts. You have some bulls who bought the close of 74, disappointed 75, 76, and they'll probably look to exit on a bounce as well. Okay, I'm going to stand up for a few, and then I'll be back here around in the next 9 minutes or so, and then I'll start the review. Again, we're sideways. It's better to just be flat and waiting for tomorrow. This is what I was talking about. A lot of traders that take a low probability trade like 75, if they get bad follow through, they're really quick to exit because they know it's a low probability trade. Selling below 72, if the follow through on 73 is disappointing, a lot exit, and that's why 74 reversed up. But I'd be flat and waiting for tomorrow. Interesting day, really more interesting than usual. And one of the neat things about trading is every day is really fascinating from the market perspective because there's so much information. You look at a chart, and the more you study a chart, the more you just begin to realize there's so many nuances on a chart. Anybody that tells you that it's just noise, or if you go to a 1-minute chart that it's noise, or these tails are noise, everything has meaning, and you can infer it in many different ways. But the point is, I think one of the best things traders have to learn is the true importance that everything is meaningful. And the more you study charts, the more you think about charts, the more you'll learn. And the good thing is, I remember back to when I first started looking at a chart, and someone showed me what a candlestick was, and it wasn't black and white charts. They were this basically, just green and red bars. And I remember just the first week of looking at a chart, just having the biggest headache in the world trying to grasp what these bars mean. Like, is this bar a bull bar? Where's the open? Where's the close? What did it mean? This bear bar here, what did that mean? Now I can look at a chart and there's not even less than a fraction of a second it takes to think, okay, is that a bull or a bear bar? It's beyond subconscious. And what's fascinating about trading is the more you look at charts, the more things become subconscious. You start looking at these rallies, go back to white chart, you start looking at these right here and you see all these open gaps. And you think, it's a big gap up day, we're in a trading range, but we're holding above the moving average. I don't know, maybe this is a bear trap, and the bears are going to get trapped, and we're going to get a rally. You look at this rally here, and you say, wow, it's overextended. But the chances are we're going to go sideways to the moving average. Eventually, more and more of those pieces just get ingrained in your thinking as a trader. And the reason I wanted to say that is it just takes a lot of time in thinking, and every day that you spend looking at charts is one more day you're going to improve. So no matter how frustrated you are, just remember that every moment is a learning opportunity. And for me, a lot of trading, I mean, all of trading just about, has been trial and error, learning from mistakes. Obviously, we're fortunate enough that we have Al's material to study, so you're not completely in it alone. But all of these little things, selling at the moving average, I've made that mistake hundreds and hundreds of times. Selling here and scaling in, I've made that mistake hundreds of times. And then I've made the mistake of selling, scaling in, and not being able to get out break even on the entire trade. There's just so many mistakes I can think of. But the point is, you just have to you have to practice every day. And the best way to practice, the first thing traders should practice is stop entries. Focus on stop entries. What's a good stop entry? What's a bad stop entry? Where are the decent swing trades today? What are the major reversals? What are the minor reversals? What's the always in direction? Big bear bars to the downside. Why did we reverse up? The more you think, the better you're going to do. Some of the best traders I know are very, very heavy analytical thinkers. They just sit in rooms and they think. If you listen to Ali Afshari or you listen to Al, you can just tell with the way they talk. They think. You know, Al says in one of the videos, one of his favorite things to do is to look at a chart and just think about what the chart is doing. And that's one of the biggest challenges I think traders have. They do not spend enough time just looking at charts and thinking through it. Part of trading, this is the not fun part about trading. The reality is, part of trading, just like getting good at anything, is there's a time variable. If you want to be, if you want to play professional basketball, there's a time variable to it. It doesn't matter how athletic you are. There's just an experience level that really goes hand in hand with trading. You can study all of Al's material as much as you want. You can spend 15 hours a day studying it. And if you do that, you're going to get immense value from it. But if you want to become Al, that's a whole nother topic, but if you want to become really good at trading, there's also an experience level you have to develop. That's why I'm a big proponent in saying I think traders really should focus on stop entries. Stop entries mean selling below bars, buying above bars. Consecutive bull bars, buy above, buy above, buy above here. Bull bar, closing on a tie, entry bar after a high one, buy there. Don't buy there, don't buy there. If you buy there and you start to get a reversal down, you get out. No good sell. Maybe you miss this and then, you buy here or you buy here, hold for 2 legs, and then you get out there. But anyways, we'll talk more about that. I'm hoping down the road to give some webinars on always in trading. How do you trade as an always in trader? So if you're forced to just trade stop entries, how would an always in trader trade the market? And there's various ways you can do that, but I know that would be a beneficial topic. Talk about the daily chart. So the daily chart, we got a tail above the bar, no surprise. We're still forming gaps. High of this bar, low of this bar, gaps up here. Tomorrow will be interesting. So because tomorrow's Friday, let's go to the weekly chart. Friday, this is the weekly chart so far. And we're getting a bull bar closing on a tie. Look at every bar we've had ever since down here. We're getting a lot of bull bars closing on their midpoints, really ever since January. We only had two bear bars this year. So 2 weeks out of the year have been bearish bars. A little bit bigger of a bar. So traders will pay attention to see what kind of follow through will we get. Will tomorrow be, well, let me back up. Traders are going to pay attention to see what kind of tail we're going to get on the bar. So if tomorrow is a big bear trend day, that'll put a tail above the bar. Important resistance going into tomorrow or support will be the high of last week, which is 5066, so 5,066. That's only about 30 points away. And really, when you think about it, that's really not, we could get there overnight. It's just really not all that far. We go to a 60-minute Globex chart. 60-minute chart right here. We've been away from the moving average for a whole lot of bars. You can see we had this bear channel, and I'm assuming we got some kind of measured move. Measured move down from here to here, went a little bit lower. We tested around 50% here. Whenever you get a large sell-off and you get a strong reversal bar and it leads to a successful swing, sometimes it's pretty common for the midpoint of the bar, like right here, to be support. Now, why is that? It's going to take too long to. Whenever you have a big bear bar, you'll have some traders sell the midpoint of the bar right here, and they get trapped on this big bull bar. Most traders, nearly everybody, I can't prove this, but logically, it just makes sense. Most traders are going to exit when you see a bull bar like this or when you start to see follow through. More and more traders give up because they don't know how far up it's going to go. But later on in life, when we test back down to this price level, the market has memory. And traders remember, hey, if I remember when I sold down here and for lack of words, I got screwed and the market went a lot higher. I'm not going to do that again. So this stop entry right here, look to the right, or in this case, look to the left. This becomes support. The high of this bear bar right here, that becomes more support. And we keep getting this cluster of support levels that get tested and find buyers. Anyways, big reversal up bar, closing above the moving average. One of my favorite trades is when you're below the moving average and you get a cluster of wedges and you get a strong outside up bar or follow through. So in other words, you get a strong breakout and follow through because the odds are really, really good that you're going to get some kind of measured move up. And you can see we obviously did over the next day or two. So we had this rally. I guess this was yesterday. Yeah, this was yesterday on the 21st. We had the rally here, strong consecutive bull bars. That's buy the close. Just buy, as scary as it looks, trade small, buy, put your stop down here. And the odds are just high, you're going to get a second leg. But back to what I was saying, I mentioned that the high of last week is probably this right here, is 59.25, and that's true because this is a day only chart. So if we go to a Globex chart, and by the way, you're going to see me, I go back and forth all the time on Globex charts or day only charts, and I really don't have a strong preference. I like trading. I like the concept of there being 81 bars to the chart. I know that the reality is the E-mini it has more than 81 bars in a day, but I like the concept of it. Anyways, you can see the high of this bar is 66.5. And if we go back to here, the high of last week is actually right here. There's two. We can easily get back down to this price level, though, here and here. So while I do think that as strong as this is, I wouldn't be surprised if tomorrow test gets back down to the moving average, maybe this high and this high, which would put a tail on the weekly chart. So that's a long discussion. Basically, I'm saying I think we're going to have a tail on this current week. I doubt it will close on its high. It might, but chances are probably against it. Let me check one more thing. Still have one more week to go for the month of February. We gapped up on the open, and bar one is a relatively big bear bar. But the problem with selling bar one, it's a swing. You can take the sell for a swing. My only issue with selling below bar one is it's a bear bar after a big gap up. And typically, whenever you get a gap up is the same as a breakout. And whenever you get a big gap up on the open, typically the market, it'll treat it as a breakout, a gap and a breakout. It's the same logic. Therefore, more likely, there's buyers below scaling in lower. Most traders are better off waiting to see. If you're looking to sell, wait for a strong sell-off. Bar two, we have a bull bar closing on its high. For the bulls, it's a high one buy, breakout, pullback, buy. So bull breakout, pullback, bar one, buy signal, bar two. Probably sellers above, but bar two closes on its high, and I don't know if the probability is high enough to sell above the bar. The bulls, the reason for that is even if the reason there's sellers above, there might be, is this bar might have to pull back and fall below one. However, even if it does pull back and fall below one, there's probably buyers below scaling in lower. And then bar three formed a bull bar closing on its high. And that's enough to trap the bulls, trap the bears into a losing position. It also trapped the bulls out of a winning position. You had some bulls who bought above two, disappointed, and you had some bulls who did not buy above two because of bar one, and they're trapped out of the trade. Then when they saw three close on its high, what did those bulls do? A lot of those bulls started buying at the market, and that's why four reversed up quickly. You have bears who were short, holding, they either sold below one, they sold above two, and then when they saw three, follow through buying after a high one with bar two, a lot of those traders concluded that the odds were we were in a trading range and we were probably going to get a second leg up. In other words, the risk was increasing that the high one above two was going to be successful. On the open, whenever you get a big gap up, high probability you're going to get a second leg in the direction of the gap. By in the direction of the gap, I mean if you get a gap up, high probability you'll get a second leg up. If you get a big gap down, high probability you get a second leg down. And the reason for that is second legs, breakouts often have second legs. Bar five, bear bar closing on its low. But the bulls, bears who sold above one, sold above three, sold during four, they're trapped holding a losing position. And I suspect a lot of those bears will be quick to exit. Therefore, there might be buyers below the bar five low. And then bar six is a bull bar closing on its high. For the bulls, can you buy above it? Some traders might. And if you do buy above six, you probably need a wide stop. So for the bulls, buyers above, but also buyers scaling in lower and probably going to go sideways to up, but strong enough breakout 2, 3, and bar 4 that I suspect we're going to go a little bit higher. The one thing I know for sure is the market is going to get closer to the moving average. And then bar 7, we triggered the buy above 6 and we pulled back. But look at bar 7. Does that look like a strong sell? Of course not. There's probably buyers below 7 scaling in lower. Bar 8, consecutive inside bars, possible final flag. But the bears, they have not done enough to make this always in short. And therefore, probably buyers below scaling in lower. 9, doji, 3-bar micro channel, 7, 8, 9. But where are the strong bear bars? The bears have yet to make money below anything. And until the bears make money selling below bars, I suspect the odds are we're going to go sideways. 10 sellers above 9, but probably buyers below 10. And then there were 11, bull bar closing on a tie, second entry buy, tight trading range, probably going to get trend resumption up, even if we pull back first. And then 12, you can see there were some sellers above 11. We triggered the buy and pulled back, but we still closed on a tie. We'll probably get a second leg up after bars 2, 3, and 4. So for the bulls, they want to measure move up, something like this. The bears obviously want the opposite. They want to test down in the moving average. 13, we have 3 consecutive bull bars. It's by the close, probably going to get a second leg up, but not all that clear. And then 14, bear bar closing on its low. But after 3 consecutive bull bars, I suspect buyers below 14 and at least a small second leg up. 15, consecutive bear bars, but again, not enough to make this clearly always in short. 16, another bear bar, but still we're at the bottom of a trading range and we're at the start of the channel. The channel, it technically started on bar 5 and then we went sideways to up. 3 consecutive bear bars, strong enough for a second leg down, but it's not clearly. But again, the bears have not done enough, and because of that, chances are we're probably going to go more sideways than straight down. Then we got a doji on 17, probably sellers above, but also buyers below. 18, an inside bar, probably buyers below, might be a final flag. It's a triangle, so it may break below 18 and reverse up. That's what happened on 19 and 20. 19 and 20, you can call it a second entry buy, second entry sell. 18 being the low 1, 20 being the low 2. But who in the world is going to sell below 20? It's a bull bar, big risk at the bottom of a trading range after a big rally, after a big gap up. It's possible that we get a sell vacuum test of the moving average, but if we do, it's probably going to be a trading range day more than a strong bear trend day. 21, bull bar closing on its high, so it's a small breakout of a bear flag. The bear flag being 19 to 20, or 17 to 20, this bull bar to 20 right here. 21, 22 consecutive bull bars testing the high close of bar 13. A lot of traders saw 13 as either in a bull trend or a trading range. Therefore, a lot of traders were not interested that bought the close at 13 would probably not put a stop below 11. The better stop was somewhere down here, and they would exit long before the market got there. And then 23, an inside bar, you can call it a high 1, but it's at the top of the trading range. Consecutive bull bars, 21, 22, trapping the bears, betting on a second leg down with 14, 15, and 16. That's good for the bulls, but I suspect we're probably going to go mostly sideways here. 24, bear bar closing on its low, but a micro channel since 19, probably buyers below. And 25, prevented 24 from triggering, good for the bulls. But then it got a bear bar on 26. For the bears, second entry sell, but not a great stop entry sell below 26. Probably going to go more sideways here. 27, bull bar closing on a tie. 28, bear bar, a little bit of a surprise, may go a little bit lower, but it's just retesting this price level down here. The bears, they need to get closes below the moving average, otherwise sideways is more likely than a bear trend. And then a doji is not good for the bears, another doji, probably going to go sideways, and we got near the moving average and reversed up. For the bears, it's a second leg down with 31. We had a surprise, 28, pull back 29.30, second leg down 31 that reversed up. You can take the buy above 31 for a swing, but it did not touch the moving average. It's possible that 31, 32 is a strong bull bar and 33 is a strong bull bar, and that would pull the moving average up. However, at this moment, we have not touched the moving average. Consecutive bull bars, 31, 32, probably going to go a little bit higher. 33, bear bar, but probably buyers below. And then 34, 35, consecutive bull bars. Strong enough surprise, we may break above the top of the range. Possible wedge, 1, 2, 3, or you can say bar 5, bar 13, and one of these bars up here. But whenever you get a bull channel and it's starting to get tight, you always have to consider the risk of some kind of bull breakout above the bull channel. It's also a bull breakout of a trading range. 35, so bull bar, and then 36, a doji. Good for the bulls. We're starting to get a tight channel. And then 37, another bull bar. At this point, traders really have to be concerned about the possibility of an upside breakout. And that reduced the probability of selling below 38, 39. The bears, they failed to get a strong entry bar. And then more traders, the bears that sold below 38, scalped out on 39. And that's what led to a pullback on 39. You had bears buying back shorts and bulls buying as it went down. It's also a retest of these breakout points here. High one buy at 39, probably sellers above. But because we have an open gap here in an overall bull trend day, I'm getting more concerned about the risk of an upside breakout. 40, 41 consecutive bull bars, probably going to go at least a little bit higher. And then 42, another bull bar. Always in long, no reason to sell. 45, we're selling off and testing this breakout point here. But I mentioned, let me back up, 42, 3 consecutive bull bars, and then 43, high one buy. I mentioned some bulls would buy the close and buy more below the bar and get out break even. And then 44, it's a doji, probably sellers above. And that's what led to a second leg down 45. 45, I mentioned, was one of those important bars. The bulls really needed 45 to close far below the 37 close. In other words, closing the green line, the negative gap. They also needed 46 to be another strong bear bar, and instead, it was a bull bar. So the bears who sold the 45 close are trapped into a losing position on 46. 47, bull bar, but while there might be sellers above, there's also trapped bears. And then 48, another bull bar closing on its high. I think the risk is getting real that these are measuring gaps. And then with 48 being another bear bull bar, odds are pretty good. We're going to go higher. By the close, 48, 49, 50, 51, bull bar, but a smaller bar increases the odds we're going to pull back soon. Doji 52, probably buyers below, then 53, a high one. There's probably sellers above the high one, but because this channel, the rally is so tight, and it's a micro channel, 45 all the way to 52, I suspect the downside is limited, and therefore 52, even though 53 is a high one and it's a bad looking high one, it's actually a more risky sell above, especially in this environment. The odds are bulls buying up here using a wide stop, scaling in. The odds are high that they're going to make money. 54, bull bar, probably going to go at least a little bit higher. And then we got a buy climax 55 and then a bear bar. I thought 55 is probably more exhaustion. However, instead of getting exhaustion, it led to a second leg up on 57. 57, strong enough bar. Sorry, I keep pausing. I'm having to get some water. My voice is getting dry. 57, second leg up, but still tight bull channel. I'm not all that convinced that it is exhaustion. One of these bars will lead to exhaustion, but most traders are better off waiting to see the exhaustion. In other words, wait for the strong bear bar. The reason traders are buying up here is it's like this. They know even if they buy up here and scale in, chances are they're going to make money. And then a bear bar 58, big bull bar 59. 59, it's a parabolic wedge, 1, 2, 3, fairly late in a rally. I think the chances are pretty high that 59 is an exhaustion bar, and we'll probably get a reversal down here within a bar or two. But when you look at that, it's really scary to sell the close of that bar. Plus, if you sold the close of this bar, you might have sold the close at 57. You might have sold the close at 55. So it's really not all that ideal. 60, follow through, but really not all that ideal. And then we got a strong reversal down on the following bar, 61. For the bears, enough of a surprise. We're probably going to go at least a little bit lower. And then 62, it's a bull bar. It's a pullback from the 61 breakout, probably sellers above. 61's enough of a surprise. I think we'll get a second leg down, which is why traders will sell the close of 61 or 62. However, there's buyers near the moving average, so I think the downside's limited. And that's why 63 sold off and then pulled back. For the bears, it's a bad sell above, it's a bad buy above 63, so you will have traders selling it. Plus, remember what I said, 99% chance we're going to get to the moving average. 64, another bear bar closing on its low, but a little bit of a parabolic wedge. One moment. Sorry about that. 64, another bear bar, but probably buyers below. And then we had a pause on 65, and then another leg down on 66. At this point, parabolic wedge, 1, 2, 3, or you could say 1, 2, 3, and 4, with 66 being a failed breakout of the wedge. I suspect buyers down here, and we're probably going to test back up to this area right here. 67 bull bar closing on its high. It's an okay swing buy, but you may have a little bit of a pullback. Bulls, they'll buy the close here, they'll buy below, and they'll buy the close here, or if they bought the low here, they'll probably add one above a bull bar, which makes me think there's a high probability we're going to test somewhere around 51.02. Low one short on 68, probably buyers below, but then we got a rally up to here, 3 consecutive bull bars, probably going to get at least a small second leg up, and that's why there were buyers below 72, and we tested the 60 low, and then we went sideways. What do we expect for tomorrow? I think tomorrow has I think overall, I suspect we're probably going to pull back. We're getting fairly climactic on the higher time frames, and this is as strong as this is. I think we'll probably develop into a trading range and create a tail on the weekly chart. We gapped up on the daily chart, but we're back at the top of the channel. Not a great way to draw it. So it'll be interesting to see if tomorrow will be a big bear bar, or if we'll stall. Maybe we test back to the high of this right here. I do think we're going to fall below this red line right here, which is the high of February 12th. I don't know what just happened there. So there's February 12th. Probably going to pull back to there over the next couple of days. For stop entries, you can buy above 2, better to buy above 3, you can buy above 4, and then you can even buy above 6, but I think we'll go more sideways. If you buy above 6 or if you buy above 11, it's probably better to use a wide stop down here. And some traders get out below 14, but if they do, they probably buy, maybe they buy somewhere again in here. If they don't, maybe they buy again above this bar. But really tough call. You're buying in the middle of a trading range, and it's expanding, and it's really not ideal. Most traders are buying below bars on pullbacks. Other traders, they wait for the triangle here, and they buy above bar like 31, or they'll follow through on 32. And then where did it become high probability? It was arguably high probability if you could use a wide stop and scale in, but I think buying maybe 47, 48, or 49 in here, it became high probability we're getting a bull breakout of a bull channel, and we're probably going to get a couple of legs up. You can buy anywhere in there. You can buy above 54, and buying above these bars, I think it's really, really tough. Had I bought, I think you get out a couple of points anywhere in here. And as far as selling, I think it's better. If you can sell quick, like 61, you can get a second leg down. But other than that, most traders are better off waiting and looking to buy some sort of wedge bottom. Limit orders, I thought maybe sellers above 2, but they got trapped on 3, which led to a strong reversal. Thought buyers below anything, probably sellers above, but not an easy trade. Buyers below 18, I thought that was reasonable. What about buying 27? I would not. You can, but chances are we're going to get closer to the moving average. Buy below 33, buy below any of these lows. But even here, same thing. better to buy closer to the moving average? Probably buyers below here, and then 63 sellers above, but it never triggered, and then high probability to buy anywhere around the moving average for at least a bounce. And then I thought sellers above, buyers below 68, sellers above 68 up here, but I wouldn't be that interested in selling right here. I do think we're going to pull back around 71 or 72 because of that average price I talked about, buying the close of 60, buying more of a bull bar, getting out break even. And then that's probably it. There's other limit order trades, but that's a good portion of them. Buy the close, sell the close. It's probably buy the close on bar 4. And these are more buy the close than sell the close. What about buying the close at 22? It's not ideal. You can buy it for a small second leg, but I think that's pretty tough. You're buying into resistance. I thought it was clearly buy the close 48, 49, 50, 51, 52. Really anywhere in here. It's more difficult to buy the close at 55, 57, or 59. And then sell the close 61 if you're really quick to make decisions, but that's more of a scalp, not a high probability swing. Yeah, someone was saying I wasn't trying to be occupied. Someone was asking me to please stop being occupied when I'm taking the review. I'm really not. If you want the real truth, my throat is very congested at this second, and it's getting harder and harder to talk. So I've drinking a whole water bottle in the past 10 minutes. But I do apologize for stopping so much. So let me go back to some of the questions here. Hey, Brad, what do you expect from the market tomorrow? Yeah, I kind of talked about that. I think on the weekly chart, we're probably going to pull back I think we're probably going to pull back over the next few days. We may go higher, but I think we'll probably go sideways. We may, if we get a strong bull bar, I don't think we will. I think we'll probably pull back. So if I had to guess, I think tomorrow is going to be something rather disappointing. Okay, question. I've started trading more now, and I realize that it's hard to keep track of all the trading that I do. Do you recommend paying for a trade journal like TradeZilla, or take screenshots of trades and add to personal notes, something like OneNote? Yeah, I've never used anything like TradeZilla or any of those kind of trading journals for years, and I still do occasionally. I just do it more with PowerPoint these days. But I typically make things in PowerPoint now that I find that are interesting. But I also use OneNote for years. And when I was listening to Al in the trading room, I would just quickly take screenshots of things, and either on a tablet, I'd write on the chart, or I would just type a few things. Let me see if I can just show it here. I'll see if it'll load. So here's some of just the various things these are screenshots I made of the course years ago. There's a random section. That is not it. Here's just various kind of all sorts of little examples. And I don't have any order to these. I still need to go back through these and make more and more notes. But there's all sorts of things I put in here. And, overall, some of them have to do with the books. Some of them, here's some kind of daily webinar things I've done. But there's all sorts of it. And there's no rhyme, there's no necessarily rhyme or reason to it. I need to organize it, and I keep saying I will, but I keep forgetting. But overall, as far as recording trades, what I would do a lot specifically with trades is I'd run a trade manager analysis, download it into Excel, and then I would go over those trades. So the biggest things I would look at when I'm trying to measure trades, the first thing I would look is I would look and see if there are, what leg are you, so if you're buying, add in the market cycle. If I bought, was I buying in a bull trend, or was I buying in a trading range? if I was selling today, was I selling when the market was clearly in a bull trend? Count the legs. Was I buying when it was leg 3? Or was I buying when it was leg 1? Those are things I would take a look at. And the other thing is I'd really focus and ask yourself, I like to compare my trades a lot to always in. Were my trades in line with the always in direction? So for me, that's how I would do it. But the more you trade, the more you'll learn. But I've never paid for any of those services. Someone asked why. I know you mentioned the buyers below low ones and sellers above high ones, but I'm still confused as to why. Yeah, it's simple when you think about it. So you have a rally and a pullback, and then here, this is the high 1. Most of the time, what you have is something like this. You have a bear trend, or you have a trading range. So this high is high. This is high in a range up here. So this high 1 is high in a range, and it's not clearly breaking out of everything. And what that leads to is a deeper pullback, because this sell-off here is strong enough that the bulls who bought in this area here are disappointed, and that's what leads to a second leg. The opposite, which is kind of like what you have in here, is where you get a strong rally to the upside, and there's nothing to the left. Then you get a pullback, and instead of getting, and you could say the same thing about bar 2 right here, you get a pullback that leads to a strong second leg to the upside. So that is the way I view that. The opposite, when you get low ones, such as right here, testing support, usually they fail and lead to higher prices. Does NVIDIA have anything to do with the rally yesterday? Yeah, I don't know how much NVIDIA, obviously NVIDIA, it's a large company, it weighs on the market, but there's other reasons as well. When I look at the daily chart, let me get out of this pin mode. When I look at the daily chart, I'm not going to, if I'm looking at this chart, I'm not going to think, oh yeah, it's NVIDIA, that's why we rallied. No, NVIDIA is just one reason out of several. Looks like that's frozen. NVIDIA is just one reason out of several. Looks like that's frozen. NVIDIA is one reason out of several, but more importantly, the reason we rallied, we tested the moving average and then we gapped up. So that is the more important reason. Someone asked at 11:57, is it possible we're in a small pullback bull trend? Definitely. They were asking that around here. Definitely. Whenever I see open gaps, these green boxes, I'm always thinking possible small pullback bull trend. Okay, question. What do you think that the NASDAQ will do tomorrow and the rest of the following days? NASDAQ, more or less the same. So we're testing the moving average several times. We're gapping up here, testing the highs. We're not above all of these bars over here. And overall, I think NASDAQ's more in a trading range here. And that's interesting. Typically, NASDAQ has more volatility than the S&P. And overall, but go back to your question without getting into a long answer, I think we're probably going to go sideways here. We're still in a bull trend, and the odds slightly favor higher prices. So let's go back to that small pullback trend discussion. This would be my concern as a trader looking at this chart. And it doesn't matter if this is, ignore the price and time. So ignore the fact that this is a daily chart. Strong rally. Couldn't close the breakout point, but we had bars below. Then we got an endless rally here. Couldn't close this breakout point. So now we have gaps. And gaps usually lead to larger trends. We have a measured move target this low to here, which takes you all the way up here. So we could easily rally up to 18,400-ish, but we'll see. big bull bar closing on a high in the middle of the trading range, I expect we're probably going to go more sideways. I'll see one more thing, and then I'm going to wrap this up. Crude oil daily chart. We're starting to go sideways, but in a tight trading range. We're still testing these highs over here, and I suspect we're probably going to continue sideways. The bulls did a good job getting a reversal, but they really need to do more here. But we'll see. All right. Thanks everybody for listening, and I will talk to everybody very soon. By the way, again, I'm going to, I don't know what time tonight. It will definitely be tonight, probably 5 hours from now. I'm going to make a review session on YouTube on the Brooks Trading course for yesterday. So I'll host an end of day review for yesterday's price action. That'll probably be around 5 hours from now. So check around Discord, because I'm not sure exactly what time I'm going to be able to do it, but I'll try and send the link on Discord about 30 minutes before I start it. So that way whoever wants to join can join. Okay, thanks everybody for listening, and I will talk to everybody soon.